Good morning, traders, and welcome back to BluSky Trading Live. This pre-market guided audio with me, Coach Becky, is here to help direct your conscious and subconscious thoughts to actively experiencing in your mind's eye your most successful trading session. I encourage you to hop on here live with me daily before you trade with a focused, calm intention. I know mornings are busy, but trust me and the science here, because slowing down and focusing now for 15 minutes will help set us all up for the best trading session. These visualizations I'm about to walk us through are designed to train your brain, what it looks like and feels like to perform at your optimal level, follow your prepared system, and trade as you ultimately desire to each day. Please do follow with me with regulating your breathing with purposeful, deep, centered breaths. And if it feels right for you, close your eyes now as you listen. I will lead us through a successful trading day with a focus on your daily habits, mindset, trading system, and personal objectives that lead to a high performance analysis and execution. Visualize yourself with a strong, steady, focused mindset to behave as you intend during your trading session, to train your subconscious that you are fully capable of achieving your greatest goals. I do it, and I'm so grateful for these sessions every time I make time for them. So thanks for being here with me. Let's get into it. My body wakes ready as I've given myself the sleep and restoration needed to perform at a high level. Before I start considering my charts, my mind prioritizes gratitude. I give thanks for this new trading day. I give thanks for my safety, stability, and opportunity. I give thanks for my health, my mind, and my ability to participate in these markets. I give thanks for the responsibility I carry as a trader and for the discipline I continue building. I give thanks for everything aligning for me and through me. I set my intention for this session. I visualize myself moving calmly and purposefully through every step of my morning routine. I see myself prepared, grounded, emotionally steady before the futures market opens. I visualize potential setbacks, volatility spikes, fakeouts, delayed entries, and unexpected movement. I am not fearful though. I adapt. I stay flexible and fluid when I trade. I remain emotionally neutral and focused regardless of what the market delivers. I am fully prepared to step into the arena today. My mind is clear, optimistic, and alert. I am excited to see how my futures market has developed overnight. The story has, of course, continued unfolding while I rested and reset. With my trading space prepared and optimized, I sit down at my desk and log into my platform. The glow of my screens feels familiar. This is my workspace. This is my business. Trading is my craft. I begin gathering the most current information and context. I review overnight highs and lows, key levels, economic data, liquidity zones, areas where participants may become trapped or emotional. Every trading day tells a new story. I approach this session with curiosity and an open mind. I carefully observe where price is trading from the larger time frames all the way down to my execution chart. I have an entire toolbox available to help me study and interpret this market. I have experience. I have emotional control. I have the ability to participate safely and skillfully without fear. Many hours of screen time, practice, setbacks, and repetition have prepared me for this moment. Months and years I have put effort into my craft. I'm ready. I adjust my charts and finalize my trade plan. I define my key levels. I define my risk. I define exactly what conditions must be present before I participate. I have already done the work required to perform well today. This is what showing up for myself looks like. As we move closer to the opening bell, I continue priming my mind. Today, I choose patience over impulse. I choose discipline over emotion. I choose execution over hesitation. I choose consistency over excitement. I choose progress over perfection. I am calm. I am prepared. I am ready. Let's go. The opening bell arrives. My session is live. Volume begins to flow into the market. The morning is still young, quiet beneath the growing energy of traders around the world stepping into action. Deep breath now. The smell of coffee sharpens my focus. I settle back into my chair and I watch the first candles beginning to print. I enjoy observing the opening energy take shape. There is no rush, no pressure, no need to force anything. I mentally review what my ideal setup looks like. I already know the type of trade I am willing to take. I know my position size. I know my acceptable risk. I know how I intend to manage the trade if my setup appears. The soft hum of my computer and the glow of my monitors create the backdrop for my work. I calmly cycle through my charts and data as they expand. The excitement I feel is controlled and measured. I'm not here to gamble. I am here to execute. Relaxing my shoulder and jaw, I take a slow, deep breath. I feel centered, focused, present. Even as the volatility begins to increase, my breathing remains steady. I have the patience to wait for true opportunity. I do not chase. I do not react emotionally. I scan for clues, for acceptance, for rejection, for confirmation. I continue observing how price behaves around my critical levels. I review my notes and remind myself exactly what conditions I planned to trade. I remain composed and intentional. I remind myself that my goal today is not to feel excitement. My goal is to make high-quality decisions. My behavior will honor my preparation. My actions will align with my standards. I am here to execute my edge. Suddenly, I notice one of my best setups beginning to develop. The market is moving into an area I anticipated. Price is interacting with my level. The order flow begins supporting my thesis. I feel connected to the rhythm of the market. I watch price stretch, pull back, respond. As consolidation develops around my planned entry area, I prepare myself calmly. I aim for an entry that aligns with my trade plan and allows for a clean, logical stop. No hesitation, no second guessing. With a calm confidence, I execute the trade exactly as planned. I set my target. I place my stop. The trade is now live. I trust my preparation because the work has already been done. Do I feel butterflies? A little, and that's okay. I welcome that feeling. It reminds me that I'm alive. I am participating, that I am willing to take calculated risk in pursuit of meaningful reward. At first, price rotates slightly around my entry, a little in profit, a little out. This is normal. Every trade involves uncertainty. My risk is already defined, so I do not overmanage the position. I continue scanning my live data and order flow. I stay objective. I'm trading information, not emotion. Price continues responding well. Momentum begins building. I instinctively recognize that my trade is proving itself. This is the opportunity I waited for. This is why my patience matters. As momentum increases and price pushes through an important area, I intentionally add to the position per my system. I stay composed. I stay disciplined. With skill and efficiency, I adjust my targets and manage the trade according to plan. Everything is unfolding as it should. I continue allowing the trade room to work. As profits build, I notice anxiety attempting to enter my mind. The quiet voice whispers, "Don't give it back. What if this reverses? Maybe you should exit now." I recognize this voice: scarcity, fear, emotional protection. I don't fight it. I simply observe it and return my focus to the data. My edge requires trust. My growth requires courage. My desire to succeed is stronger than my fear of losing. Almost instantly now, partial profits began filling. Good. I acknowledge the progress while remaining emotionally neutral. My work is not finished yet. I continue managing the remaining position with intention. I understand that markets naturally pause, rotate, and consolidate before continuing. I do not panic during healthy pullbacks. I stay aligned with the conditions in front of me. My data still supports the trade. My plan still supports the trade. There's nothing I need to force. I take a slow, deep breath. Take a brief step away from the screens. Freshen my water, freshen my coffee. When I return moments later, price is approaching my target. Within seconds, the remainder of my target order fills. I slowly exhale. I thank the market for the opportunity. I fulfilled what I set out to do today. This is what I know how to do. This is the result of preparation, discipline, and repetition. I will continue showing up and executing like this again and again, every day. As I stand up, stretch, and smile, I breathe deeply. I feel such gratitude for this life. I embrace the opportunity to trade. I embrace the opportunity to grow. And I trust that everything I am building is continuing to unfold exactly as it should. Thank you for being here with me this morning, guys. Practicing these intentional trading visualizations to support and rewire our personal psychology is really impactful. This is the behind the scenes work that takes focused effort and consistency to have it grow and become a normal part of our process every day as traders. It's worth your effort though, because as this practice every morning really does help develop our skill in picturing ourselves successfully executing our system and achieving all of our goals. Not every trading day is going to be perfect, but when we visualize what it looks like and feels like to approach the market with intention to our system and our plan and our mindset, we change. Purposefully filtering what information you feed your brain and directing your thoughts specifically for your highest good immediately before stepping into your arena is neurologically powerful for high performance. So good job showing up with me this morning. I appreciate you being here, and let's handle this trading day. Happy trading.
Check 1, 2. We are now live and ready to start trading. We are seeing unprecedented volume coming through on the open, shifting our short-term outlook.
Another day at BluSky here at BluSky TV on YouTube. I am Justin. I will be trading with you this morning. What do you guys think of our new intro video? I'm pretty happy with it. First time I got to see it. Pretty cool to watch. Good morning, everybody. Let me know how you're doing. Did anybody catch this overnight volatility? We had a pump from about 275 to 950, so 700 points in the overnight session. So, and it was funny. I was actually watching basketball, or I remember what time it was, but some news came out that, you know, Iran was blocking the strait, and then the market bounced about 200 points. So it was pretty funny to see some bad news, and then the market just absolutely ripped to the upside. Hey, we all want Mike back. I'm right there with you. Ripped to the upside. So, I mean, we've already had massive expansion. We ran right to a massive level of resistance. I wanted us to get a little bit higher to about 980, but, you know, you don't get everything you want. I did catch a little bit of the upside move yesterday, so that is nice. I just purely momentum play. Just based off the candle action, it was hard not to get in. I got in when we broke this 550 level, basic like sweep reclaim, and it just ran target to target, dipped back to the breakout, and then broke out again. So it was pretty clean price action. Now this was, I don't remember what this candle was, but it went from 385 to basically 585 in one, 3 to 5 minute candle. So that was a very, very aggressive move, and right around the Tokyo Open. I know a lot of people were just chilling in shorts and then just boom, straight to the face. But as always, we'll kind of start. We'll look at the longer time frames, kind of get our plan for the morning, let the opening bell hit, and see what we can do. Now it's hard to argue that we're not bearish. Let's get rid of the drawings and let's just look purely at price action. So this is the daily. I mean, we have clearly broken structure. When we broke that 900 level, we clearly broke structure on the daily, which is right where we basically came back last night and rejected off of. So until we kind of break over that level, it's hard to even think bullish. So we're still looking for downside moves, and honestly, I'm looking just off the daily chart. I'm looking at like this 440, 450 level, 27, 440, 450. That would be my next major target for shorts if I'm like a swing trader or something. Now, do I think we're gonna get there today? It wouldn't be crazy actually, because we've moved more than that in the past couple of days. But that's a massive daily target level if you want to kind of push it. It's previous all-time high, kind of reversal level, and then breakout level. So it's a massive level. Another key level to watch would be about the 27.9 level. That one's kind of more feasible if we're actually going to drop today. So daily, we're looking bearish. The 4 hours, interesting, because this is the only time frame that I see being bullish. We had our reversal. We came up. We're kind of holding support, and this is what I call the inverse head and shoulders, the smiley face pattern. Left shoulder right here around, it's called 800. We have the reversal here, and then the right shoulder also around 750, 800. So if this holds and it's lining up with VWAP, I could see a push up to the 29K area. Now, that being said, that's the only time frame I'm pretty bullish on. Everything else is kind of looking to the downside. The hourly chart, we pushed up. Looks like we completed kind of our buy side, and we're dripping down, touched VWAP, rejected. 30-minute chart, same thing, where we curled down, rejected, starting to look like downside move. So for me, going into open, I'm kind of looking for a pop and drop, kind of a push up into some level of resistance and then drop for more downside. Now, guys, please keep in mind the last, today is Thursday. This whole week, we've been seeing 100-point candles at open. Like literally, I think yesterday I wanted to drop into a pop. It dropped right into our level and then popped to our target 150 points, all within a 1-minute candle. So if you're going to trade open, or if we try to hit open, keep that in mind. You don't need to size like crazy to make some stupid money right now. I think yesterday I was up $1,000 on 3 minis. So that's just kind of putting into perspective the sizing that you can use to make a crazy amount of money when the market is this volatile. And I think the average true range of the 1-minute candle yesterday was 70 points in the morning. So if you're using real size and trying to play appropriately, using a 70-point stop loss is gonna wreck you on some full sizing. Now that being said, we are sitting right at support going into the open. So I'd kind of like to see a pop up to this 800, 830 level drop. If we break under 750, I'm incredibly bearish. 778 prior week low. Yes, 778 prior week low, which lines up with kind of that breakout level from last night. Once we broke prior week low, we just rocketed. So bunch of key levels right here. We have 2 minutes until the open. So I'm not going to front run our position going into open. And if we do come here to reject, targets are 750, VWAP, and then back down to 550. Anybody else hit the trades last night? I know Breezy hit a couple of good trades during the Asia session. But let me know. Let me know if you're going into the session green. It was crazy to see how volatile it was at, what time was this last night? 7:15 at night Eastern. And then just a 260 to 500-point move within an hour and a half during the night session. All right, about 45 seconds till the bell rings. Now, typically, if you guys have traded with me before, I use something called ADR. This is down in the corner, average daily range. It's all out of whack right now. We've already broken the daily range in the night session. But if you look, the other day we moved 1,600 points. The day before, like 1,400. So I have to take this with a grain of salt. We can absolutely just go ballistic. And when we are downtrending so hard, the moves to the upside can be violent. Typically, it's been a grind to the upside, elevator down. It's going to be volatile both ways. And there's the opening bell. Let's see what we want to do real quick. So we're sitting right at support going into open right now. So little pop expected. See if bulls can push over 780 to 800. If they can do that, we should see about 830. If we break 750 to the downside, we're probably just going to continue dropping. Absolutely wild week so far, though. Wild week. I'm going in green. Just keep it that way. Yeah, keep it green. Keep it green, Ricky. I'm really going to be looking at where this 4-hour candle closes. That's going to tell me the picture. A lot of my best trades have come right after the 4-hour close at 10 a.m. Eastern. Kind of tells us where the moves are going to go. Yeah, we're going to be looking for shorts. 700 could be a level of support. Expect a small bounce here. I'm eyeing a 750 to 760 short at the moment. I just want to get a little bit of confirmation before I put an order in. All right, looks like bears are in full control at the moment. I'm going to go ahead and put a little half-size order in for a sell at 755. See if we get tapped in. I know it seems kind of far away, but, you know, price is moving 30 points a second, so we're probably going to get tapped in. Stops have to be a little bit wider, you know, about 30 points. So we'll see if we get this tap in. 700 key level to break. We'll run right to view up, and then I'll be targeting for this 550 area if this play works out. And I got a big old cup of coffee for this morning because yesterday, the first 2 hours of the session felt like a full day. My brain was fried after that. I felt like I'd been trading for like 2 days straight. I think I took like 10 trades, which is crazy for me. Might not pick us up. Might not pick us up. Let's go ahead and mark this level right here. Just so we have it. We got close. We got close to the infield. Didn't quite get it. I'm gonna keep my order there, just see what happens. I've seen crazier things happen, but it's pretty hard to argue against the Bears right now. Might actually be not a bad idea to layer in. If you are short, you're looking really good right now. Really hope I can get tapped into this. Bottom picked long scalps. Man, you're a bold man long trying to catch the bottom on these knives. All right, we should get filled here. Oh, no, tell me. No. Oh, man. Missed it there. All right, we're in. Oh, and we're out. We're still in. That was close. That like ticked my stop loss. Telling you guys, volatility is crazy right now. These key level sweeps are just gross. And this is going to be way too fast for me to tell you when to get in and get out. So, you know, play your count. I don't like how we're hovering around entry. We should have dropped if this was going to be a nice play. Yeah, I'm going to assume we get stopped out of this one, but we'll let it play out. Yeah, look at that structure hold. Give us a dump. There we go. Come on, continuation. Come on. Love to see us get it down to 715. Would be huge. But, you know, there we go. All right, TP1 hit. I'm going to take it. We're out. And the only reason I'm taking it, because if you were with me yesterday, I hit TP1 4 times in a row, and then it reversed on me. So I'm not going to let it happen again. Oh, man. The one time I take TP1, it goes. Wow. I got to keep one at least next time. Come on, Justin. What are you doing? Remember, VWAP is next big target. And target hit. All right, let's see if it's gonna hold or not. I'm curious. That was a beautiful play. I was so close to getting stopped out. I think I was 1 tick away. Or now it looks like two points away. Great start to the morning, though, guys. Great start to the morning. I got to go back and rewatch Becky's lab. She was literally talking about holding your winners. And I'm usually really good at it, but this volatility has got me, you know, just wanting to lock in some gains. And I think that was $250 on 3 micros to start the day. So that's a win for me. And now we'll probably wait and let this first 15-minute candle print, see what we want to do. If you are still short, you want to see the bulls or the bears kind of defend this 715 level. And I'm going to watch this run right to 550. Watch. Up 338. Good job. Well, there was 100 points. Oof. I'm going to regret selling that one. All right. Maybe I might be looking at a re-entry on the 700 level. This is starting to look like a pretty clean setup. The reason I really like this short going into open was this 30-minute chart. We had our breakdown, and then we consolidated, holding kind of the structure. And then once we broke, you know, we're looking for the retest on the smaller time frame, which we got. It did sweep it. Like I said, we have to have some larger stop losses, but it sweeped it, and it played out to our first 2 targets perfectly. I say 3 micros is big size here. 3 micros when we're moving 100 points, 150 points is more than enough, guys. But if you have an account that can handle it, by all means, size up. You can make some insane money right now. You go on social media and people are like, I made $300,000 today. All right, stalling at VWAP, kind of expected, but a couple minutes till this first 15-minute candle prints. Looks like it's just gonna be a bearish candle. We'll see. All right, here's that level I'd like to see bears hold. Okay, good job, bears. Short done with 2P. Good job, Mary. 1 micro for me lately. Hey, yesterday afternoon, I was a 1 micro warrior. I think I hit like 3 50-point plays. I wasn't trying to risk too much, but that was some nice extra money after the morning session. I'll say it all the time. Like the afternoons for me, I call that gas money trading. I'm already green for the day, but if I can make another $100, $200, that adds up so fast, so fast. All right, Bulls haven't given up yet. Let's see if the Bulls can reclaim 750. If so, it might be a little rangy. I haven't checked. Does anybody know if we have news at 10? Somebody let me know. I think we do, but I'd have to double check. No, we don't. No, we had PPI this morning. Okay, no news. You're long at 675. You guys are crazy long and trying to catch the knife. I mean, great play, but wow. Okay, so now I don't feel too bad about kind of paper handing that short. I would have gotten stopped out of break even. Bond auction. Yeah, that's not till 1. I'll be long done by then. So that 15-minute candle is a pretty indecisive doji. One micro, there you go. That's what I'm saying. You can make a salary on 1 micro. People sleep on it. I'll tell you the common thing with everybody I've taught over the years and everybody I've talked to that has switched to being profitable. The common theme is switching to micros and just getting those consistent hits. Ooh, look at that pump. Okay. So bulls are not done yet. Jeez. $300 to 1 micro. Let's go. Let's go. Was that some news? I don't see anything. That's what I'm saying about this volatility, guys. 200 points. 200-point pump in 3 minutes. Okay, so now I'm not gonna hop it along, but if we break this 900 level, we got to switch long. And if you are long, you want to see this 830 hold. I'm so green, but I blew up a new eval in 3 minutes. Rookie numbers. I've done it way quicker than that. 1 mini for a quick 800. Nice, good job. Yeah, my bull target is at 920-ish level. I agree with that. I mean, but if you caught that long, it's starting to stall. Just do whatever you want. But let's see if we pull back to this 830 level. I'm not opposed to giving it a try. I would not hold anything. I mean, if you caught 100 points, that's amazing. So 835 entry. Let's see if we get tapped in and we can ride this continuation. And if you're just joining, I'm trading 3 micros because these candles are 200 points. Hard for me to go full size when I can get stopped out all within, TP and stopped out within a 1 minute candle. Looks like we missed our entry by a few points. And just like that, we're in. And almost just like that, we are out. No? Crazy. All right, I'm gonna take that. I'm gonna take $200 until every time I see it right now. I don't even care. Oh my god, paper handed again. Wow. All right, don't sell when I sell at this point, guys. You'll become rich if you just hold. Wow. I cannot believe how fast this stuff is moving, guys. Crazy for the second time, see you're taking it. Yeah, I mean, there's full target. Wow, guys. I probably left $1,000 on the table already. But I'm green. I'm very green, so that's all that matters. They tickled my stop loss on both of those, though. That was close. It's just insane how fast this stuff is moving. $300 off 2 micros. Let's go. Let's replay the Cyclab after this. Yeah, we should actually. Nick, if you're listening, let's play yesterday's Cyclab after this. All right, and there's over 100 points from that entry. Sheesh. I just cannot believe how volatile this is. All right, we're over that 920 level, so that was my breakout level. So we might have to just get back in. Only evals after nuking funded. It's not a bad idea to just do evals with this price action, guys. This is every play is a lot more risky than normal. It's hard not to say it's more risky when these candles are 150 points. I mean, 814. Yeah, over 100 points in the last 3-minute candle. And we're only 20 minutes into the session. We've already had all this movement. Absolutely nuts. See what this 4 hour is looking like now. 4 hour, it held hard. If this can somehow close over 29K, we might just pump all day. Gotta have that drawdown. Yep. Hmm. $29K. All right, let's put an order in. 920. Let's see if we get filled. So I think it's safe to say we gotta flip our bias a little bit bullish, huh, guys? $170 if they can pump it. My next target over third, it would be 30, and then 115, and then 250. And I would say those are crazy targets, but nothing's crazy right now with the market. Anything is possible. So if you are in longs, levels to watch are 950 and 915. See, all time, can you imagine? We just pump like 3,000 points. Or what is ES doing? Are they in sync? ES has not broken out yet. So NQ is leading big time. All right, so that's some confirmation, some more confirmation to the upside. I'm going to keep my order here at 920. I don't want to chase this too much. 2 for 2 so far this morning. Yeah, Mike probably would be up 100K right now. No kidding. Be slapping 8 minis up 300, 400 points. I'm excited for him to come back. An entry at 950 might not be the worst idea, but I'm gonna chill. I'm not chasing entries in this market. Looking back at this chart, Pretty bullish setup right here. Clear double bottom. Once we broke this neckline, it was just game over. That 9 iron, or what was that entry I had? This 830 entry was absolutely killer, honestly. So let's see if we get this 920 fill. That would be 3 trades in a half hour for me. And oh, we got the hourly about to close. So this could be interesting. All right, we're in. Let's see if this third entry is going to pay off or not. All right, let's get this push. Come on. All right, and I'm out again. All right, we're up like $600 on this stream, if not more. In and out, bang, bang. Who's green? Who's green, guys? I'm nice and green. This has been a great morning. I've left a lot of money on the table, but I'm green as hell. And guys, I'll be right back in like 2 minutes. Just hold tight. Take a little breather after that. If you're in a play, be safe. I'll be right back. holy pump. Again, glad I took profit because I would have gotten stopped out of break even. Or I would have gotten stopped out of my stop loss. So quick 35 points. There you go. Green, no blown accounts. Can't copy trade because I'm on my slow computer. Yeah, I'm not copy trading at all this week, just personally with my accounts, because I'm just worried about slippage. I know Tradecopia is pretty good, but I just don't want to risk it. Just don't want to risk it. But we are incredibly green, and we're just breaking every bullish level at this moment. At this point, I might just have to ride these longs, like just keep going until I get a reason not to. Oh, looks like there was, let's see, the UAE and Iran are said to have met face-to-face to ease tensions. Okay. Doesn't mean anything. I want to see if bulls can hold this 950 level. That's what I want to see. Entry 269. You're looking at ES, I'm guessing. I mean, this 920 level looks good again. 950 potentially. Breakout level would be over 040, which I think was the play we were playing yesterday. Yeah, it was. Now remember, guys, just because we're pumping does not mean like we're long-term bullish. We have a lot of resistance areas to get over. This is one of them right here, this 040 level. We've had a lot of 4-hour candles sweep it and come back down. No real structure on the 4-hour. It's just kind of pumping. But as long as 920 holds, I'm looking for longs. 969. I don't know. Yeah, I mean, I'm looking at this like 955, 960 area. So I could be on board with that. Does it mean anything that ES is holding at 330? Yeah, I mean, this is massive resistance from yesterday as well. So ES breaks above 335, market's just going to go pretty nuts. But we're only half an hour into the session, guys. Oh my God, thank you. Nobody told me my mic was off. I am so sorry about that. I was just saying I think we're gonna get a nice dump. So none of you guys heard me, so it doesn't matter. But I am kind of eyeing some shorts. Took one earlier, nice. Yeah, that was what I was saying was this 30 area. That is a key area of resistance. Just look at the 4-hour chart and see how many times we rejected off it, couldn't close above. So it makes sense that we would reject there. And now we're creating, oh, nasty selling wicks. I'm eyeing the 920 and the 950 area for a little pump for more downside. If we break 830, we'll probably break lows for the day. So I kind of want to see if we can get in a short here. We're running right to that 830 level. $860 long, 25 points. Nice. This just looks very bearish. Now, especially with that rejection up there. If we get some kind of closure under 750, game over. All right, let's see if this is going to hold or not. I don't think it will. Tempted to do an 890, 900 short. Let's see. What do we think about that? We haven't. We did break structure. Let's give it a shot. 900 is short. So 875, 890, 900. That's like the pocket. And it looks like we tap 75, 80. Okay, I didn't get the fill. We just broke a key level. We might have to adjust our entry on this one, guys. That went without us. Ah, man, that would have been nice to get filled. All right, entry is going to be 835-ish. That same exact long I took earlier. We're going to play the short side. I wanted to get up here, so B set up for me, not A plus. But we're going to see if we can ride this momentum. Okay, we're in. That was quick. Beautiful. Good stuff. And I'm out again. Another $200+ in less than a minute. So that is almost $1,000 on stream, guys. We're crushing it. I'm not holding, but target is 760. And then we break 750, guys. Like I said, game over. I can get a short and really hold. Well, let me know if you're making some money with me, guys. I'm not even holding, and I'm up a really nice amount. This money's handing out $200 in a minute. I'm taking it, and there's target. So 90 points on that level to level play if you took it. I mean, wow, they're giving so many opportunities to just make an insane amount of money right now. Some of you guys got to be printing. Let me know. Yeah, I'm up. I'm up. Nice. This is the first day I'm reading the markets really, really well. I mean, I was reading them well yesterday, but I was getting swept out. But today has been amazing. The lag is tough. Let's see. 1, 2, 3, 3.5 second lag on my end. I know it might be tough to follow with scalping, but I'm calling out the levels, so just write them down. Dragging these two accounts to 3K to pass 1 to 2 micros. There you go. Gonna be a little choppy in this area, guys. Keep that in mind. Between 750 and 830, it's gonna be a little choppy. Thanks, Dana. Thank you. Thank you. And again, guys, I'm taking my money quick because I don't want to hold through these retracements and give everything back in the next candle. So sitting on my hands, I want to see if 750 is going to break. If it's not, this might just be kind of like equilibrium for the session. Okay. Kind of last line of defense fib lines up with my breakdown level. So we are sitting right at equilibrium for the session so far. I never like getting in a play around equilibrium. It's where you're just going to chop around. That was a heck of a defense by the Bulls there at that 760 level. So if you want to be safe, 920 to 760 is your choppy range. All right, we're about an hour into the session, up about $1,000. Great day so far. Man, where else can you make this kind of money like this? This is crazy. I think my total trade time for the 4 trades is about 4 minutes. Let's get another 4K. I don't know. We need to see up here, but we need to see a break to get it. Like a significant time frame candle close out of here. If you look at the hourly, we're stuck. We're straight up stuck. Like if you just want to draw a box around these hourly bodies and just only trade at like when we break out, not a bad idea. done for the day. Average 325 on 6 funded. 1 hit day. Lost spent 3. Damn, you got a lot of accounts. Good stuff though, James. Good stuff. 325 on 6 accounts. I mean, that's $2,000 for the day. That is crazy money when you put it like that. I feel better about scalping all morning looking at the hourly chart. A lot of indecision. It's kind of holding bullish consolidation, but pretty back and forth. So I'm in no rush to get back in any trades. We're killing it this morning. This 820 hold or 830 hold is nice though. I could see us breaking out of this 930 range. Yeah, pretty indecisive right now, guys. Just the rejection up here makes me think downside, but it's just straight up chop zone. You got to go down to like the 1 or 3 minute to find There's still nothing in here. Nothing. No reason to force it. If I had to pick a side, it'd be short. Like to see a double bottom at 760. Yeah, that's that key area. We break that area, and like I said, it's game over. We're gonna see low day. Anybody in a position right now? Kind of curious. Or did everybody kind of take their money when I did? No trade for me. All right, let's see if this breaks down. Just get us out of this area. Not much to do in here. Yeah, no plays to be made in this area, guys. This is just back and forth right now. This is what I call tilt price action. No clear direction. Two really good moves, though, on the market this morning. Same with ES. ES ran right to resistance, couldn't clear it. Dumped right back to support. Clean moves. Both instruments. Gold looks pretty clean, too. Everything looks clean, but range bound. Yeah, this is a good time to kind of mentally reset after that scalping we were doing. Get your brain right. Get ready for the next setup and attack it. We got SpaceX tomorrow. Anybody a buyer on that tomorrow? I know there's a lot of hype That thing is probably going to go ballistic at open. Try then trap a bunch of people and then drop back to earth. Kind of really curious. Yeah, 60. Yeah, exactly. Let the dust settle. Maybe dollar cost average into it, not all at once, not one big position. Yeah, this is price action is definitely not clean anymore. Very, very range bound. And like I said, the 0.5 fib for the range for today is at 850, and we are just bouncing back and forth. Above it, below it, no continuation. Bounce from prior day high. Looking at the daily, that's 830. That's why that's a key level as well. I want this 555 today. That's my I want to be able to say I told you so level. 555. So if we hit that, I want you all pinging me in the Discord telling me I was right. All right, guys, we made it to Thursday. One more day until the weekend. Insanely green on the week. Another great week. Another great week. You want 170? Ooh, what do I got down there? That's way down there. I don't even have anything marked down there. I'd have to rechart. Oh, I was looking at like thousands down. 28. 170 down here. Do we have anything there? Oh, we got a little daily imbalance down there. Okay. We still got a lot of gaps on the daily to fill. $27,400-ish. That could be an area to load up on longs. Lost $4 billion last year, priced at 96x. They changed the rules to have to execute inclusion to the NQ100. So your funds have to buy it, and the insiders are not being held to the same. Yeah, that's crazy. That is pretty crazy. I mean, Elon's about to be a trillionaire. And Elon still has all the voting rights. I want to say, somebody look it up, but he has the majority voting rights. Change the rules for a reason. Yep. Kind of interesting, huh? Well, all you got to do, guys, is become billionaires, and you can do the same thing. That's one little trick, being a billionaire. The M status is getting in the way. Yeah, we'll start with millionaire first, and then you can just go right to billionaire afterwards. All right, got about 15 minutes left in this hour. And this hourly structure is just not giving us much to work with right now. I mean, I'm content with what I made already for the session. Let's just see if we can find a nice A setup. Market has really cooled off after that first 30, 45 minutes. We've just been stuck here. Literally after 10 o'clock, this really died down. That 4-hour candle was a straight up doji. Couldn't clear these previous bodies. We're just stuck inside them. I wonder if we'll get an inside bar day. If you guys have any questions, let me know while we're just kind of sitting here. Anything trading, BluSky, about me, whatever you guys want to talk about. Well, we're just kind of sitting here watching the market go straight up sideways. Anybody going to be watching the World Cup? That starts this weekend, right? Oh, it's on today. The U.S. plays tomorrow. Okay, on a Friday night. I like that. Speaking of sports, if anybody watched that playoff basketball game last night, that was one of the best games I've ever seen in my life. Craziest games. Had me screaming on my couch. All right, let's see if we can finally break this structure. It looks like we might. We don't want to just hop in yet, though. And there it goes. Okay. Remember, for the bears to really take over, 760 needs to get out of the way. So if you are short, 760 is like your target or a bounce zone. I'm just not seeing anything really good at the moment, guys. All right, it's going to run to 760 here. Range day, it might be, but I think we're going to break down. But I mean, if you look at the overnight session, we were down at 28,274. So we're way up there right now. So VWAP is starting to line up with my breakdown level. So if we do break that, it should be good. All right, come on, Bears. Come on, Bears. Do it. Can they do it? That is the question. I think they can. All right, there's 760 bear target. Come on, Bears. Let's get this move. All right, so somebody was looking for a double bottom at 760. Let's see if that. What's up, Tina? Can you tell us how you plot your 760 support level? Let's see, where did I get this one from? I've had this level for a while. It is from, let's see, Thursday, May 7th. And all I do is I find a consolidation area on the hourly chart and I mark the consolidation area. Nothing special at all. And then as you can see, we break out, we come back and retest it. That confirms the level and I'm keeping it on my chart. And then if you just keep going right, it's been respected. No close below it. As long as it's being respected, I kind of keep it. And if you look now, overnight, it was another consolidation area. So that kind of double confirms to me that it is the key level. And then just as you can see on the smaller time frames, we just keep tapping it. So a lot of confirmation that this is a massive level. And I have a key Fibonacci level, the 0.236 from today's range. That lines up with the bottom of the consolidation area. So it is a triple whammy home run level for me. That is why I keep calling it out. Gotta love a good old triple whammy, right, guys? Just break down already. Come on, give me a play. Thanks watching you trade. I've seen your level. Yeah, I'm a big level trader. Level and candle structure. That's all I use. And a little bit of luck sometimes. But I like to pinpoint my entries. I want to know where price is going to react. I want to be right or wrong quickly. And you guys, if you've been with me for what did BluSky go live like 3 weeks ago? 4 weeks, I can't remember. If you've been with me, you see that I'm right or wrong very quickly. All right, we're gonna break down here. Let's see if we can get this break and retest. I'm looking for something like this. And then death. 555 full bear target for the day. And if you're just joining us, we're up about $1,000 on the stream this morning. Haven't taken a trade in the last 45 minutes. I haven't seen anything good, but we killed the first 30 minutes, which I'm glad because the first 30 minutes are typically my lower end of my win rate and trading. So this is good. All right, break this sucker down. So somebody was looking for the double bottom. This might be it, but I think it's kind of hard to argue against the bearish momentum here. And it looks like we've clearly broken structure to the downside on this 15-minute chart. So I'm leaning heavily to downside. But I want to see confirmation. I don't want to just hop in. Picked the wrong day to start late. Yeah, the market should pick up here in a minute once we break this structure. So we tagged VWAP. We're going to bust through it right now. There we go. All right, good read on that. Let's see if we can get it in. Damn, ran right to support. If you're in shorts right now, we're in a bounce zone. All right, we're going to go for a 755 short. See if we get the fill. If we break 700, we evaluate. Support ES. Let's take a look. ES has broken support, that 289 level. So everything's pointing to downside. Let's just see if we can get in. But good read on that. I'm trying to call out these levels as clear as possible so you guys literally know where it's going to go. All right, we're toast. This is gone. All right, remember I said if we break 750, we're going for low a day. So low a day is let's just call it 650. So we're almost there. So risky entry would be 700. I'm not convinced yet about 700, but that was a clean drop. I saw it coming. Could have been a breakdown play, honestly. Stop sell. quick 100 points. All right, let's see if we tag low a day. Did we tag? I think we might have tagged it. I don't know, like a point away. I don't know. Tempted to take a stab at like a 700, 710 short. What do we think, chat? Should we try it? Nope, too late. It already hit. I'm just gonna keep my 755. No reason to force anything. If it gets hit, it gets hit. If it doesn't, it doesn't. I'm already up really, really nicely on the day. Oh, the 700 short was it, guys. Wow. All right, low day has been broken. This thing is going to free fall. Damn it. Damn it, damn it, damn it. 555 target, guys. Did anybody get in? Please let me know somebody got in. There you go, Vodka. Somebody got in. That's all that matters. As long as one of you got in, I'm happy. But man, that was a. I read that perfectly. I don't know. I was thinking about that 700 entry, and it just as I was talking about it, it tapped it. So 675, 700. Bears want to just defend it. Well, if it was blue sky support, you'd get some help. All right. So 675, 700. Let's see if it holds. We clearly have broken structure to the downside. I just think this is going to go. Tempted to just mark it in, guys. Yeah, and if you guys see the bot in the chat, really nice sale we have going on our Orbit plans, $50 off. Those are the 1 day to pass plans. So if you want to pass and get funded quickly, that's your plan you want to get. She's gonna go. All right, I gotta get in this. This is gonna run. This is just gonna run right to 555. Let's try 650 short. I don't think I'm gonna get filled on any of these. This is gonna just go to target. $630 is another area you could get into. I just think at this point it's almost the target, so I don't want to chase it. Up 346. Good job. Good job. Okay, let's see if we get rewarded for chasing. Anything over about 675 plays about dead. Oh, we're in. All right, getting close to my cut zone. It's worth a shot. Yeah, I'm going to take an L. All right, first L of the day comes from chasing. Who would have thought? Hourly candle close clearly broke structure. Actually, I'm going to keep that 755 entry. I shouldn't have strayed from that. All right, so 4 for 5 on the session now. Still a pretty good win rate. We should come back and tap this 755 area at some point. It might not be while we're on stream, but we should. Got so close to that 555 target. We are about 25 minutes towards the end of the London Power Hour. Swept us on that one. So at this point, I'm just waiting for a retest of the breakdown zone if we get it. If we break 540, this is going to be an incredibly bloody day. All right. I didn't think we'd get this fill anytime soon, but we'll see. Ooh, tag the bottom of my zone. I mean, I did chase. I took an L. Small L, though. Okay, we're in. Beautiful. All right, 30 points, guys. I gotta take the $200 in 10 seconds. It's too easy. And yes, I know I'm leaving a lot of money on the table today, guys, but I'm also making a lot of money. But who was talking to earlier? Tina Marie. That's how I play my zones. You see how we got that instant reaction? If you're playing with any type of size, I mean, you're up $2 grand today just off these tiny little scalps. I'm using 3 micros and I'm up $1 grand with a loss. And I'll say it every time. If you see 30 points within 10 seconds of your play, I'm good taking the cash. I don't want to see it go red. I don't want to worry about it. And look, now we be red. If we do break back into this area, I really have no desire to trade it. Especially if we break above 830. If you are in the short, 700 is your first major target. Another nice play. Another nice play. Great reaction off of it. See cash, take it. Yeah, exactly. I mean, $200 with minimal risk is my key point. Minimal risk, $200, all within 30 seconds. I mean, I'm trading to make money, guys. If somebody just stood there and said, do this 30 seconds, here's $200. I mean, shoot. Click this button and then click this button 30 seconds later, I'll give you $200. So that's how I think about it sometimes. And realistically, I mean, $200 is a person's salary for the day, and we're doing that in 30 seconds. All right, 20 minutes left in the session, guys. 20 minutes left. Looks like it's going to pop back in. I am eyeing an 830 short if we do get up there. Let's see if we can get one more trade in. What do you guys think? One more? Could probably take a 755, 760 scalp to the upside. No real confirmation yet, but probably could. Yeah, but I like that area to short, 830-ish. I might try to run it up until there, up to there. Back of a VWAP. I just don't know if I want to mess with it right now. All right, there's a little bit of confirmation to the upside. We should run straight up to, let's see, 800 then 830. If you want to take a scalp to the long side. All right, here's 800 coming. Man, these levels have been on point today. All right, there's 800 running right to 830. This is a V-shaped recovery. Jeez. I'm not going to take the 830 short. This is too much strength right now. Yeah, I have a feeling this is going to bust through. Bulls need to hold this 800 for the next push. It's looking like they want it. We'll see. Okay, there's 800. Let's see if it holds. All right, so the 830 short would have worked for a scalp, at least. I'm going to take my 380 gainer buffer and be done. There you go. Good job. Okay, well, if you did take the 830 short, there was TP1. I'm flat, like I said, though. And again, we're back in the choppy range, guys. Okay, the 830 short was the move. My bad, guys. Curious if this 760 is going to hold again. If that goes, then that was just a disgusting sweep. Damn, I should have taken that. Oh well. Got about 10 minutes left in the session, guys. But I mean, we're what, 5 for 6 this morning? I mean, that's a killer. Absolutely killer. I'm really curious if this is going to hold or not. I'm going to test something out with a micro. I'm going to do a stop sell. This is not a, you know, like a high confidence play. I just want to see if we break down if this is going to work. The stop sell is basically a momentum play. If we break through this area, I get filled, and I want to see it just die. What's up, buddy? But I'm pretty much done for the session. 5 for 6, close to $1,000 using just 3 micros. Doesn't get much better than that. The RQ strat. Oh, is that what RQ is? He trade that way? I mean, it's great if we're gonna trend. It's awesome. For range bound days, not awesome at all. Damn, MQ is doing people dirty right now. Levels are leveling though. All right, well, I'm gonna cancel that order because that ain't gonna happen. All right. Let's see. Do we just go long now? Or do we just keep our money and not do anything? I think long is the answer. Yep, long is the answer. Got to be quick today. Got to be quick. These little retracements are pretty nuts. Yeah, that's most likely it for me, guys. I don't think I'm gonna hop in anything else right here. We're right in the middle of that chop zone that I was talking about earlier, the 0.5 fib, where we just bounced around earlier. I don't really have any desire to get into play around there. Matt will be live at 2 p.m. for his technical analysis lab, and then him and Becky will be on at 3 for Power Hour. And the team has been crushing it, man. Everybody's been doing well. Breezy will be on at 8 p.m. for the Asia Open, and if you haven't traded with him and you're around, join him. I mean, the money printer's on all day, all night. You know what? I want to put that sell slot back on. Maybe we do get it. Let's see. Into the close. Let's see if we get it. So if you're going to keep trading into the lunch session, 8:30 is your major pivot point, and 7:55 is your downside breakdown target. But she's kind of flip-flopping right now. All right, there's only about 5 minutes left in London, and there are no plays for me to take. So that is going to be it for me, guys. If you did make some money, we have that profit and loss column in the Discord. Go ahead and tag me so I can see your sweet, sweet gains. I know I had a great morning, very profitable. So again, the team will be back at 2, then 3, and then Asia Open. And then next week, we should be on streaming all day, every day with 0 downtime. If you are willing to come on the TV show and do a little interview with me, shoot me a message on Discord. I'd love to interview our members, learn about their trading, learn about their struggles, see how we can help. But guys, until then, stay profitable. I'll see you next time.
Hey, what's up, traders? Becky here, Coach Becky at BluSky, and I get the esteemed pleasure of being your psychology coach, which just means we all of the coaches here at BluSky talk psychology throughout all of our streams and every chance we get to like hang out with you guys. But once a week, we get to have these focus sessions where it is just a conversation around a certain topic that relates to trader psychology, mindset, approach to the markets, the mental game that supports the strategy game underneath what supports all of our trades. So thanks for being here with me, guys. And also appreciate you guys being flexible with the time change. Yesterday, I had a thing with my kiddo all day at his school. So, but I didn't want to skip a week. So here we are hanging out on a Wednesday. Today is another suggestion from one of our wonderful traders, Mary. She was mentioning about how sometimes it's tricky to hold the winners, especially when we're getting these huge outsides move. I mean, I think that this conversation is so important for today because the market is moving so fast. Like we're seeing really large, like 1 to 2 minute candles. And so it's tricky with this sort of volatility to feel that kind of confidence with how to manage the trades and how to hold and how to, keep the momentum going without taking outsized risks. So this topic today is kind of on point. So I hope that a couple more people trickle in. This time change is tricky because it's going to be off of people's radars. It's not really a Wednesday thing. This is the only one-off that we're going to do it on a Wednesday. Traditionally, Tuesdays are quite available for me, and I hold them for our psychology chat. So anyhow, we'll do what we can do. We'll hang out. We'll talk some strategy with mindset and see how it goes. See who trickles in. But I'm grateful to be here with you guys. I love these conversations, and I will never get tired of making them because there's so many ways to think about trader psychology. And every time I create one, it makes me a better trader. So I love having these conversations with y'all. Yeah. Okay. So this is the conversation, right? So in a perfect world, right, you get into a sick trade and then it just flies. It just moves in the direction. It is beautiful. We take full profits. We take the whole move. When you are back testing or you zoom out and you see like a big move, it's like, gosh, I would absolutely love to get in here and hold to here. That's not always what we can realistically do. Oh, what's up, Waji? What's up, Yvonne? Nice to have you guys. Okay, so let's talk about how we can better do it, right? Because this is something that I also am working on improving on. And some days I nail it. And some days I am really skittish on my exits and I take profits way too soon. And so again, like I am talking to you guys, not at all as someone who has arrived in the trading world or does perfect executions every day, because I absolutely do not. But I also don't think that perfect executions every day is super feasible, especially in your first, decade of trading. And so I think that we all have areas that we could do better at all the time. I think that's the nature of the business. I think the market is humbling us and teaching us and showing us examples of what we can do better, how we can manage it all the time. And so we just need to be open to receive those lessons. So today we're going to talk about holding winners. So here's the situation, right? You read the setup right. You see your level. You want to see a bounce there. You want to see the momentum there. You see it, you get in. Amazing, right? The trade is working. This is where this conversation gets interesting because your brain then says, like, lock in your profits before it disappears. Like this trade could go back on you. What if it wasn't the entry? What if it doesn't hold? What if the counter trend takes it back? We're heading towards a potential area where it could have a reaction at the what ifs, right? So I want to kind of break that down, the core behind it, a little neuroscience behind it, a little statistics behind it, what the cost is and how we can pivot a little bit and start shifting that if this is something that you guys want to work on. So tell me who's here. Does this topic sound good? Are you guys interested? I did break it apart a little bit. So the psychology is where we're going to start. Fear overriding logic, right? That's the big part of the way that we monkey with this. Also, a debate. You can't go broke taking profits. Who has heard that statement before? Because it's an important conversation, right? You can't go broke taking profits. Some people totally believe that. Some people don't believe that. So I want to talk about both sides of that. And then a framework of how to do this, how to scale the runners, a plan that seems reasonable and feasible we can put that into our system and make it a part of how we manage our trades. And then also talk about how backtesting really provides the backbone for how each one of us is going to make this work for our particular instrument and time frame. All right, let's see who we got here this morning. 1 to 10, how often do you exit before your target? So a 1 score is not the best score. So that means you exit before your trades all the time. And a 10 is you are perfect. You hold to your peak long target. You let runners run until they tap out. 10 is an excellent score in terms of holding runners. What do you guys got? 1 to 10 scale. Who's here with me? Come on, come on. 6 or 7, 6, 7. All right. All right. That's good. That's really good. That's over the halfway point. Good job. Thank you. I probably, what was my answer to that? I'm probably like 6, 7 also, but I'm improving. So I probably was like 5 even just last year, because this is definitely something that I need to work on. Okay, so let's talk about some statistics then, because this, I want to bring it all in, right? Me too on the 5. Depends on the day and my energy, which we're going to talk about because our psychology definitely feeds into how we manage this. Okay, so let me explain to you why this is like a real good conversation. Haji, I might give you a higher score than that. I've seen you hold some boss trades. We go both ways. So, okay, so the research, there's actually research behind this, which I love to find. When I'm thinking about a topic, I kind of hunt for these kinds of information because that makes me feel some kind of way about the topics that I'm covering if I can get some research behind it. So the research does show that most retail and semi-professional futures traders underperform their stated profit targets more than not. This study is of retail futures accounts, and over 70% of them manually manage trades exits before the 1.5 even R to R. So even when the setup could have gone much farther, we're closing them sooner as retail traders. That's what I'm talking about. So 70% or more exit too early per the study of retail traders, which is most of us that are here on YouTube today, retail traders, right? So that means your winning target, your winning trade where you got it in a good entry and that one, you closed it before you got even to the target. 1 to 1 is the most common exit for that study as well, where you lock in your profits. Okay, so that's like where your risk is maybe 50 points. You lock it out at 50 points on the NQ, let's say. Also, they did more of a deep dive on the study. What's up, Mary? Welcome. Glad you're here. 3 to 5 years seems to be the turning point where traders really start to get a little bit better at taking more of their moves, the 2 to 1 targets, and you start to capture a bigger target and holding a little bit farther. So if you are under 3 years and this is something that's going on with you, that is exceedingly common to have to work through this in the beginning, because there's a lot of fear of losing. Once you finally are able to figure out how to get a good entry, you worry. The first next stage is worrying about losing what you have gained in that entry. What up, Matt? Thank you everyone for trickling in. I'm glad you're coming to the party today. I'm starting with the research on actually how many people struggle with this exact topic we're covering today, which is holding your winners. And in the first 3 years of trading, it is 70% struggle with holding beyond a 1 to 1, even when they have a clearly delineated and understood target beyond that. Okay, so you're right there. That's why you get a little above that 5, that 6, 7 range, because you're starting to creep there. That it kind of fits, right? It makes sense with how you have to evolve as a trader to first figure out what the heck a setup is that's worth entertaining, and then what to do and how to manage it. Yeah, I love that. Good job. 3 to 5 years. Yeah. See, I think it just takes. I've been a trader for over 5 years now. March was 5 years for me, and so it just like. Nothing, you can't evolve all parts of your trading that could stand to be improved in one shot. Like, it's just not reasonable. You have to target different areas of your trading and first figure out how even to identify a good setup and even to get into a good setup are 2 massive hurdles that you have to figure out before you even encounter this problem. Because the first thing is just to stop taking the low grade core trades that don't even make sense once you start to establish a system. So this is a middle range trader type of situation that we're going to talk about today, which I kind of love to kind of do in all the versions of trading. Yeah, 1 to 1 is so solid. What I like about 1 to 1s is it's very realistic to get that profit target and to lock in green. So that's going to be a part of this conversation of what's wrong with just taking the 1 to 1s all the time, because a lot of people make money on consistent 1 to 1s. Well, let me just break it down and you can continue to do whatever you want with it. But I like to talk devil's advocate of both sides of this conversation. So yeah, this industry survey of CME futures participants showed that 3 to 5 years plus traders are more likely to hold for the extended move. So that's a separate study that studied on the heels of that. Once you get deeper into the traders that last into more years, that's when the farther targets and larger profits start to accumulate. And that's because you start to figure out all the angles of this and your psychology stabilizes, because it's just very unstable, honestly, in the first few years of trading, because there's so many things that you have to deal with as you're evolving as a trader. That's just kind of the game that we have got ourselves into. Now, on the back end of this, there is an energy, right? A psychology energy to all of this, because it's not strategic anymore, right? If we identify this entry criteria, this trade setup is often a 2 to 1, or it goes at least to this kind of key level, and then the runner can go to this level, that's strategy. So if we know strategically what a trade could do, and our psychology is keeping us at a 1-to-1, then psychology is kind of the heart of the backbone of this conversation then. Yes. Okay. Matt knows where I'm going with it. Just wait. I'm going to break it. I'm going to pick it all apart. Good job. Recover faster and pick yourself up without tilting. Preventing the tilt is like a massive part of this, right? And so that's definitely a reason to manage your trades very intentionally, because preventing tilt prevents accounts being blown and prevents the catastrophic days. And that is how you succeed as a long-term trader, is just not having the big blowups. And so having a strategic plan for managing your trades will keep you so much more steadier, right? Thank you guys for engaging with me. I love that. All right, let's start at the beginning with this then. So when a trade turns green, you get in, you get your nice entry, it's starting to move into profit. Okay, so then you often shift from execution, where you got in, you thought about your trade, you thought about your risk, you thought about your targets, you decided to get in, you put your leverage on. Then you start shifting to protecting the trade. So if you're going from, I got my entry, now I need to protect my profits because now they're green, that's actually a scarcity mindset. You think it's logical and protective and cautious, but if you saw the trade and you saw an entry, you could be in at a good move. And so thinking I have to save the green is kind of putting a lid on it versus letting it go like the open air, right? And sometimes open air is scary. It is for me too as a trader, but giving it room is the abundance, right? Abundance thinking helps you stay while the plan is moving, and manage it with an edge and a plan versus capping it and locking it in and just grabbing those profits while they're there instead of letting them potentially expand, you know? Cabber, I don't know. But dude, scarcity is a real thing. Most people, whether or not we were raised in the Great Depression, I don't know that there's a ton of us here that were, but there's a lot of struggle in America, which is kind of just the truth. Like I came from very blue collar, like there was years where we were thankful to be able to shop at Goodwill as a child. And so I understand the scarcity mindset very well. And I've had to do a lot of work in that area to grow beyond that. And so that's why this conversation really resonates with me, because I have had to work through that. Yes. Yep. That's right. Okay. So let's talk about scarcity, right? This profit, it could vanish. It could go away. It could come right back on me. It could disappear. I need to lock in the green before it disappears. A small win beats a loss. I always give back profits. Ugh. So those are fear driven. And they focus on losses. Now, sometimes there is a reason, we're going to talk about that, to manage it in a different way, such as this crazy volatility we're getting. But if it's a normal sort of volatility day and it's a good setup and you have a nice open range, this type of thinking does limit that versus I need to lock it in before it comes back on me, instead of let it play out. Like I'm really proud of that entry. I back tested that. That's a great setup. Like let's see what this can offer to us. Yeah. Your trauma and PTSD and scarcity and a challenging early introduction to life will color this in our mind, in the backdrop of our mind and the emotional part of us, our mindset, what we're bringing to the charts. And you don't even think about it necessarily. Like if you're very strategic, the strategy side of trading is one piece. And then this back end stuff where your mind will trick you is a whole nother piece that you have to kind of expose and work through, because the abundance mindset is so much more peaceful, profitable, generous, kind, gives yourself grace. And that is kind of trusting yourself also. It's trusting the work that you have done to study your system and back test it and understand your strategies. And so it's more so like my edge plays out over time. My target was set for a reason based on my strategy. Let the runners work, give them time. Nothing happens immediately. If this trade does come back on me, there will be more setups. Not every trade has to win. That you have a plan that drives your exits versus wanting to just have some green printed on your chart for that day. You focus on the upside. Now, these are all things that evolve with traders. This is not, like I said, a beginner trader situation to work through, because in the beginning, you just need to understand your trading and start to lock in some green to build your confidence. This is more so that work of the 2 to 5 year trader where you have really good setups and you can get those good entries. This is where you need to start thinking about this conversation, because you could be selling yourself short once you start to build a stronger psychological edge. And you are really, like I said, locking in those entries that are awesome. We all know Mark Douglas, right? Trading in the zone. Scarcity is the mindset of someone who has never truly trusted their edge. And that's that quote is kind of truly underpinning this whole conversation, because you do want to lock in green because you don't trust it. You don't trust the trade. You think that it's going to work and you feel like you understand the rationale behind it, But if you really say, this is an A+ setup because this level XYZ, I have all these supportive things, there's divergence, there's the key support, I see the candle pattern at my level, that gives you a setup that you trust. And in that situation, that's where you want to have the abundance mindset, because you really believe in what you accomplish and you understand. That's where you can start to really appreciate the abundance side of the opportunity, versus you don't really trust it. So then you're going to second guess it. It could come back on you at any moment more. So that's something you kind of work through as you grow, and different setups are going to have different opportunities, which I want to talk about. So you guys, I think we already kind of talked about, we're all kind of working through some scarcity, but abundance is the goal. And it's going to be many, many months, if not a couple of years, to really transition this. It just comes with time and kind of intentional energy to see the importance of this shift and try to make little choices each day that bring you to it. So we are going to cover some literal strategy today to start pivoting the management of these trades in that way. But you know neuroscience, right? Let's talk about that for a quick second, because your brain is wired to exit too early, right? It is. I don't know if you thought about that before, but that is the way that humans were created. We are protectors. Like, cavemen would be very protective in order to not die. So, that's why we don't want our accounts to die either. It's not a discipline problem, more so. It is a wiring problem that in almost every other career or part of our life isn't really a big problem. And so it just gets to be a part of our wiring. But with trading, it's something we have to purposely consider and try to rewire. The loss aversion makes losses feel about twice as painful as gains feel good. This is a statistic I've mentioned before, but that's how we are programmed. Like, the losses hurt really bad and the wins are like pretty good, but like, I want to win, it starts to lessen. Your losses really hurt and your wins are like not as rewarding. It's not a 1-to-1 ratio with losses and wins. That's just what loss aversion and the way that our mind is wired works. I know, the dang amygdala, because it's important for life and humanity and relationships, not as helpful with trading. So once you're in profit, your brain treats it like something you already own, like you already got those profits. So unrealized P&L was yours. So you need to keep it. And so weathering a drawback or a pullback is a threat, right? It threatens, it adds stress, it adds pressure. You can start to, feel stressed about what's going to happen. That causes anxiety. And when you get in that anxious moment of like, I had green, I don't want to go back, I need to lock it in, you just want out. Like, you just want to get out of the trade. Like, that's a situation of getting in a trade and it goes against you and you're red for a while. The more minutes, the more seconds you sit in a red trade, the more pain you're taking, the more pressure and stress you're taking, and the more scarcity, like, I don't like it anymore. Even if it doesn't take your stop out, it can make you feel some kind of way sitting in that red. And so then you just want out. You want to escape. You want to cut yourself. Yeah, I'll talk about it. Yeah, it does affect the consistency rule. I mean, you have to keep your stop loss at a place where it's not like outside. I'm not saying to take on like either my account's blown or it wins. That's a lot. But like, if you have a reasonable stop loss and it's messing around between your entry and your stop loss, even sitting in that kind of red, which is within your realm of account management, that still adds pressure to a lot of traders if they don't fully embrace the fact that that money is gone. Like, you enter a trade and you have a stop loss and a reasonable risk, you have to consider that that's the risk you put on the table to play. It's like the ante at a poker table. That's the cost to play the game. But you do want to make sure you're not doing just all or nothing, because that totally all or nothing is more dangerous for your accounts. But I'm talking more so with when you enter, you have a stop loss and targets with all these setups I'm going to talk about today. So again, that loss aversion, it hits 2 times harder than gains win. And the open profits, the unrealized P&L, feels like it's yours when you see that on your chart. So we'll talk a little bit about watching your P&L too. But then the recency bias, right? That's a recent stop out or giving back profits makes you more anxious. You exit faster on the next trade. If something has happened in your day, especially in your trading session so far, it can increase that scarcity mindset and want to just be so super protective. So in that case too, you want to be a little bit more robotic in terms of just treating each trade independently. But it does color the importance of our emotions, like the weight, the pressure of your emotions in that moment, if you are trying to make something back. And the premature close, certain small gains feel safer than uncertain bigger upside. And so sometimes, especially if you're making back from green, there is an urge to just make it back and just like start, climbing your way out, which is smart for risk management. But if you have a really good setup, that's what I want to talk about, like trying to treat each trade independently. This is just Daniel Kahneman wrote an awesome book called Thinking Fast and Slow. And one of the quotes there supports this as well, this neuropsychological back end of this experience, which is the pain of losing is psychologically about twice as powerful as the pleasure of gaining. There's so many quotes out there that speak to this statistic. So it is, it's a real part of the way that our brain works. Here's my issue. We have to prevent a tilt. I was trying to get in. The tilt is dangerous. So obviously, right, if we tilt, it's very dangerous. Ooh, good job. Good luck, bud. So cutting early, if you're in a trade, you're in a great trade. Say you got in at the beautiful entry that you really believed in. You started seeing profits. You're like, this is enough. This is good. I feel good about this. I'm nervous. I like whatever. I don't want to go back. I mean, you lock in a good gain, right? But then it just flies. Like the whole rest of the day is a trending day. And you took this 5 or 10, 2 5-minute candles, 1 or 2 5-minute candles worth of profits. You locked it in that moment. You felt good because you locked in green. But it could have been a trending day that just time framed up the entire day. Like, how does that make you feel? It could be tricky, or even it doesn't fly up all day. It just flies up for a while more and hits your target 2 and 3 without you. And then it could maybe do all kinds of things, could start rejecting. Well, that is a risk. That's a psychological tilt trigger for most traders until you have worked through it. And that's because you can start to chase it. And then you don't have your good entry anymore when you shut the trade down, right? That's just a fact. And how many times, because I've certainly done it, where I'm like, I wish I was still in, or I wish I was bigger so I could scale out more, or I wish I had not closed out at the first target, instead held to a little bit farther because this is really a good entry location. The tricky here is that when you exit that 1-to-1 potentially, and the trade runs another many points, many more than 30 even NQ points, you're watching, you're not in it. This is the FOMO trigger, which we talked about FOMO quite a bit at the podcast on Monday, which was such a great conversation because, especially in the early years and when you're fine tuning, FOMO can be stressful, fear of missing out, right? You can start rationalizing. You start thinking about, why I just need to get a little bit more. The trade is still working out. I should still be in it. I can still get in here. Like, I don't know where my stop's going to be. You start trading emotionally because you're no longer getting a thick entry at a key level with a good stop loss placement that you can have. When you chase, your entry is never as good. Like, that's because that's what that situation is. You're chasing the move after it's already taken off. It's a momentum play, sure, which can be managed a certain kind of way. But it's generally not an A+ setup when you're chasing the move that's already happened. Yeah, there you go. So emotional trading can start. Basically, this is the risk here of you have a great entry that you really understand and you take a 1-to-1 and then it keeps flying on. You can get into an emotional place where you are chasing new entries and getting poor risk management. And then you can potentially risk giving that back and even more by chasing. So this is a really dangerous active trading loop. When you're sitting at your screens, you're watching it. You could get in a situation with giving back all of your profits and pulling you into a reactive mode instead. And so the real damage isn't the missed profits in this situation. If you lead to emotional trading, it's the cascade that you can get into that leads you down a road that will take back that 1-to-1 and more, which is like, not amazing. Okay, this is a conversation, my friends. You can't go broke taking profits. Everyone has heard this. I would ask who's heard it, but everyone has heard it. Everyone has heard you can't go broke taking profits. Now, at the heart of this quote, I believe it, because you can't go broke. You're stacking profits. You're stacking wins. I mostly believe that it's true, but I have heard arguments that it is false. And I want to just unpack this for a minute because I think there's some valid information in all sides of this statement. So it's very common. It can be misunderstood if you just take it at face value and you don't think deeper. So I'm just going to talk about both sides and a little controversial here for a minute. But the case for it, right? Small wins compound over time. You protect yourself against volatilities and givebacks and losing your profits. It helps in choppy, low momentum markets. It also helps in high volatile markets that are whipping all around, whether it's choppy or not. It could be big P&L or small P&L, but this back and forth business is very dangerous sometimes. And early in your career, it builds confidence for new traders. That's why I said at the beginning of this, that this conversation is not necessarily for the 1 to 3 year traders, more so like 2 to 5 year traders, because first you have to be able to get any sort of green with any sort of consistency before you try to push your R to R ratio. You shouldn't expect that right away. Like right now, exactly. This market is a wild thing. So take care of the downside and the upside take care of itself. Paul Tudor Jones. I love that because, you just watch your risk, you lock in some green, it all grows. Now I am in camp the case for this statement most of the time, but especially for newer traders or for certain market conditions. Those are the two caveats where I think that this you can't go broke taking profits always holds water, because you just want to be able to lock in some gains, grow your confidence, figure out your setups, watch it move, learn how to manage your FOMO, and learn how to just take notes and say, I took 1-to-1 on this trade. It went 1-to-5, but I would have had to hold for another hour, which is sometimes a really long trade time for a new day trader. And so to just write that down, make notes, have it be a part of your journal, and have it grow over time is how you push through this. But to expect it in the beginning is hard, because it is an emotional situation with holding runners. And now this part about the choppy markets, whether it's low momentum or high momentum, we see it take out wicks on either end. This morning, Jess and I experienced this, and I definitely hit stop outs because it was really dancing, and it was showing a move, and then it was coming back and it was taking out all the stops, and then it would do another little bit of the move, and it was taking out all the stops. And so in that situation, you want to lock in green, because this is the trend that we're in. This is the market condition that we're in. So this is a strategy choice at times to not hold runners, because it's not giving you those setups. What we want to talk about is when you do get the really good setups, this is something to work through. Now, the case against this is an interesting one. You can't go broke taking profits is the statement, right? The argument is that sometimes you are really selling yourself short, and it can be very frustrating. It can hold you back as a trader for a long time and cause you to trade emotionally, which can lead you to that cascade. So it hurts your risk to reward ratio. If you get in a sick entry on a day where you have a lot of moves to a lot of distance to move, a lot of potential, a lot of upside, not a lot of resistance, but you're only taking a 1-to-1, like your risk reward should have maybe been 4-to-1, but you couldn't nail it. And so one loss can wipe out several small wins if you're just taking a bunch of 1-to-1s, but then you're allowing too much downsides to that. That is really risky if you're managing it that way. Now, if you do get the home runs mixed in there, that can be skewed, but it does limit also A+ setups. Consistency bias, A+ setup. Yeah, the bearish bias is having a bias is tricky anyway. Like Justin had such a great point this morning about, like, when we're doing our pre-market, what does a bearish setup look like? What does a bullish setup look like? And always saying out both scenarios and what levels we're looking at helps with that too. But this will this limits your A+ setups and letting them run. This you can't go broke taking profits. If you live in it all the time, if you only take 1-to-1s, maybe that's just your jam, and maybe psychologically that really works for you. But it might hurt over time, recognizing that a 1-to-1 in your best setups is actually consistently a 3-to-1, and you're not getting it. It reinforces early exits and not strong trade management. So at the core of this is strong trade management creates a more robust equity curve and a stronger career that will help grow you more efficiently, more strength. And it's hard to break those boundaries with making higher levels in time as your strategy grows if you're not allowing the winners to win and learning to get some confidence with certain setups that are really good, certain conditions that are really good, that have that potential. You have to start taking pieces of those in order to get to be the person that takes big moves. You have to start somewhere with navigating this. And so if you always live in the 1-to-1 land, you're holding yourself back, and it won't create the trading career that you potentially could. For me, that's the biggest argument against this, always staying safe there, because you're leaning into the protection mode versus the abundance mode. And so being right but sizing too small or exiting too early is the same as being wrong. That's Ned Dakota quote that speaks to trusting your setup. And not every setup is meant to be a home run, but when they are, let them run. And I think that's what he is speaking to when he speaks to this, because if you are trying to constantly catch a trade and you're just getting little stop outs all the time, but then you finally get it, say you take 4 little stop outs and you finally get it and you take a 1-to-1, you're still red. But if it's a great setup and you take 4 stop outs and then you nail it and it holds and it runs, what if you get a 10-to-1? Like, that's where you turn 4 little chops into a green day, and maybe even a big green day if you were right and you just kept butts in with the entry and you finally got it. So that is what I believe Ed Dakota is speaking to. And if you study some of his trading, like, a lot of times he can just try to get a trend, manage his risk very carefully, and then lock in these sick home runs. And that can be career making. It absolutely builds your confidence in your skill. It helps you understand your A+ setups far better when you're in it for most of the ride, at least with some sort of leverage on, which is the discussion. So I think I went a little devil advocate on that. Are you guys team you can't go broke taking profits? What do you guys think? That was kind of controversial. I'm sorry about your morning, Mary. That was tricky this morning. Like I had early bulls, but then those bears, man, they threw down, but not right away. Ugh. So a big part of this is you can't just say 1 to 1 is bad and 1 to 3 is good, because that's not the answer either. I think that context is everything, and you want to think about what trade setup you are trading, what market you are trading in. I think that has to be a key part of this. So the saying isn't necessarily wrong, in my opinion. It's just a little bit incomplete. It's too nuanced to have it be just pure black and white all the time as the answer. I think the real question is, what is this setup and what does it tend to provide? Like what profits, what targets, what market conditions, where are my levels, and how strong do I feel about this, versus if I'm like lukewarm and I feel like it could be a choppy situation. That's where locking in profits is really smart, because you are just not seeing a potential run. Then why are you trading it like it's a potential run? Because then that could be very frustrating when you're not even taking profits as your 1 to 1. You're waiting to scale at least at your 1 to 2 or 3 for your first scale out. That's tricky because they can come back on you and like take you out and be very frustrating. Be like, this crazy chick at BluSky said to not take 1-to-1s, so now I never make money. Well, certain conditions are 1-to-1s, and certain conditions are give it a little room and trust your setup if you've got a sick entry. So take quick profits when this first box here. Market structure is choppy or ranging. You're in a low confidence B or C setup, which, maybe don't take the C's, but if it's in, like a B setup and you think it's going to work and what have you, but it's not your perfect A setup, that's when you want to like maybe not hold it forever, because you don't fully see a perfect trending setup. News or volatility is coming. That's another setup for potentially if you're coming into a big news hit, you want to be very mindful with how you're managing it. At the very least, tighten your stop into profits if you're trying to hold a trade through a news or volatility event. Oh, you're just mentally off your game. You're sleep deprived. You're taking your third trade. You're frustrated. You recognize that you're not really in your peak performance mode. That's not really the time to hold a peak performance trade. More so, it might be as a scalping energy because you just don't have it, or a day to not trade. Honestly, like taking no trades can be the answer, because if you're just not feeling it, you're not on your game mentally, like that, maybe that's just not the time to put leverage on. You know what I mean? So, but this conversation, right? Press for the bigger targets when it is an A+ setup, when there is structure behind it, when the large timeframes are behind it, when momentum and volume confirm the move. When you get in and it starts really pushing, you get high volume, you're getting large candles, you're getting expansion, volume is there on the side that you're trading on. That should give you strong reinforcement for like, ooh, I did get in that trade. And so in that situation, getting out might just, you got to think about, what if this really is a trade and this momentum continues? I should be in this trade. Also use your data, which I love. So if you have time on the weekends or in the choppy midday, spend a little time here and there back testing, because if you back test a certain strategy and you find that the 2-to-1 is consistently possible for follow through, you want to try and trade that. You want to try and trade your data, being like, this is this setup. There is all of this range to go. Statistically, on my chart, my ticker, my style, my entry, this goes at least to 2-to-1. So at least I want to hold something to that 2-to-1 target, even if it's just half your position. I think part of this too is planning it before you enter, because once you put leverage on, your emotions get involved, because it's all strategy until you actually have your risk on the table. And then it gets more real and you start to have the amygdala starts to try and have a say in it. And so if you have a plan ahead of time, I'm shorting, I'm getting out of blah, blah, blah. Like this morning on the live stream, my last trade was a short on ES. And I got here, I'm scaling at 40, 35, and 25. Like said it out loud, had them on my charts. I had the fills for the shorts on my chart. And when they were hit, it was like, okay, now I'm going to manage myself this way. And saying out loud, whether you're the streamer or you're in your privacy of your own home, committing to those targets makes it so much easier, I think, to hold to them, because you're less emotional when you make that decision. So I do love that part of trade management as well. Another quote here that's kind of related is, the key to trading success is the emotional discipline. If intelligence were the key, there would be a lot of people making a lot more money. I think that that's the truth. I think that's why we have these psychology conversations. I think that's why all of us think about these things, have these questions, are interested in like talking it out with other traders, because strategically there's a ton of winning strategies out there, but there's not a ton of consistently profitable traders, because these are the things that we encounter that we have to work through, but you have to choose to work through them intentionally. So scaling is what works for me. And statistically in the research too, is how people were able to expand from this. So scaling is the bridge. It's a bridge is a gap between knowing and doing. So if you really feel like your backtested strategy is a 2-to-1, but how do you actually execute on that in a way that you can grow into that potential? Partials is a way to do that. It's a way to start stretching yourself and pushing your boundaries and achieving higher success. So you take partial profits at logical targets so that you can hold the runner with less emotion. You're basically taking off some of the leverage so that your loss would not be a full size loss. It would not be as painful. So you're already diminishing the risk each time you scale something. So in that way, you can frame this as a winning trade or a winning trade once you start to scale. So we'll talk a little bit about more a specific example with NQ here in a minute, but your entry is you decide that you have a setup, you have a plan, you have levels, you get in, and then you scale somewhere around 50%, like the 1-to-1-ish. You can either do a specific point scale, 1-to-1 of the candle you get in and your risk on your stop loss placement, or you can do it based on 1-to-1-ish because, about 1 or 1.2, what have you, is VWAP. So that for me, I would hold if a 1.2 R to R is at VWAP, and I'm trading that direction, I would hold it to 1.2 for my first scale instead of 1 because, there are other things that play into a level versus just a point value calculation in my means of trading. And then after that, you can hold a runner. So this is a strategy for growing into holding things longer. So your first target, you sell, you cover your risk, you lock in profits. Now it's basically house money because you have locked in trade green on that trade. And then you get to manage your risk beyond that. So you get to figure out what to do with your runners, how many runners you have. If you're trading micros and you have a couple, you can also choose to move your stop closer, maybe not necessarily break even right away, depending on the structure that you're trading and the way the candles are printing, timeframes that you're on, or you could go straight to break even once you get your first scale. That's optional, up to you based on what your backtested study shows. If you want to trail it on candle closures, something like that, but you can start bringing your risk up once you start scaling. That makes it from, it starts to scale your upside. You get more upside and less downside every time you move up your targets and your stop, or you leave your targets where you put them and you just move your stop up. It's like win or win, stop gain is the situation, as the amazing Mike calls it. So trail and manage, right? Trail with structure, swing highs, swing lows, VWAP key levels, whatever you determine on your system is your strategy. The 9 EMA or the VWAP bands or 5-minute candle closures, 15-minute candle closures, whatever you have back tested and you understand. And as your written strategy, try following that and then adjusting as needed. And if you need to adjust your strategy, then you need to back test and have a reason and write down what it will be. That way you can honor it and it takes kind of the gray out of it when you're in the moment. All this talking. I hope you guys are into this conversation. I kind of like it. I just put some arbitrary numbers in here, but let's talk out a real-time scenario. So the NQ moves in points. Each point is worth $20. Makes targeting management mechanical and scaling off pays off. So this is literally, I'm not even going to get into like all of the nuances of VWAP and levels, whatever. I just want to talk numbers. So that's why it's like, you guys know NQ is $20, but let's talk about it. So opening range breakout, you get a strong push and a consolidation, a bull flag. It's holding, you want to take it higher. So your entry is, let's say, 240, 22,240. You get in, right? Thank you, Mary. And then, so say based on the pivot or wherever you saw the swing low on this flag, let's say, now these numbers are not for the current volatility because volatility is insane right now, but I just want to keep it clean and talk numbers. Your stop is 30 points below at 210. So target 1 could be the 1-to-1 at 270. So say you got in for a couple, you exit 2 at 270. Now target 2 is at 300. Then you exit another one that gives you basically that 2-to-1. You get 2 out, you get $1,200. The other one takes another, it gets out. That one alone, that contract alone takes $1,200. So that one contract with the trailing stop, you can add a runner, you can hold another runner. So you got in for 4. You take it beyond, you trail the stop up. This can be a $4,000 trade with exiting half your position at the 1-to-1, taking another scale at a key level, which is 300 psychological level, another 1-to-1, basically another 1% ratio on the initial stop placement. You take out more on that one, and then you have another one, and you just see what it's doing, and you watch the structure, and you trail it up. That gives a variable outcome, give or take $4,000 on that total. So that is how you got in. You had a couple contracts options and you scaled it without sailing. So you got the same 4 contracts and you took them all out at target 1, which is the 1-to-1. That's $2,400 total for that trade because you took the 1,200. Yeah. And so basically, you're leaving behind a lot of points. So if you can start to just trail it and management, 2,400 versus 4,000 ish is the example of similar contract size and just taking all out at 1-to-1 versus half and then scaling the rest. So one contract alone, I mean, that could add like $2,000 to your profit in a day with no risk on the runners. Now, that being said, you could lock in the 1-to-1 and then it comes back on you and you get taken out. Sure, in that situation, you could be frustrated that you didn't get the 24, you only got 1,200. But if it's a really A+ setup, this is where I want you to think about that. If it's a choppy market, 2,400 is great. Lock it in, be done, call it great. If it is potential trending move and you see a really good opportunity, consider splitting your contracts and trying to scale. It doesn't always work. And so I want you to put the context behind what opportunity is this? What is the market doing? This morning, it was choppy as all get out, and see green, take green worked really effectively because it was taking out stops on the smaller timeframes when this volatility is really heavy. So this is more for a consistent market or an A+ setup. But I want you to know that like breaking down the money like this is an example of it will double your money in certain situations by being able to sit longer, hold it longer, take on the kind of risk of like knowing you could be giving back these runners, but also recognizing you're not giving back to zero, you're green or you're green. So just manage that risk and let them do its job. That kind of makes sense. Like that's kind of why this kind of picks some numbers, but it really does change your P&L. And that's the goal, because a really good entry, kind of you owe it to yourself to like, take a little bit more green on that. If you really nail that, you want to be able to hold it, which is why Mike will be back at some point. He just had a heck of a busy situation come up this right now. But in the morning when he trades, like he will hold these trades for so long and it is just absolutely beautiful. And he talks about scaling too. And so you giving the trade a chance to move does take more time on patience and a shift from that scarcity to abundance mindset. But if you are reading context and it has the ability to move, it can really be a very different P&L situation. And doing it with scaling, even with micros, not these minis I'm talking about here, that can give you something that is easier for your psychology to hold. I mean, that my ES trade I was talking about this morning was MES. It was not ES. It was 4 MESs. I took out 1 and then I took out 2 and then I had 1 runner. And I did that on purpose because the one that I scaled out first, I really thought it was going for the lower target. And so I let it go to that lower target for 2. So I scaled out 1 and then 2 and then 1. So it's a little different balance. But that, again, is based on the context that I was reading, and the higher likely target was the lower one. But we were falling into support. So I was careful with a little early scale. So there can be fluctuation with this. It's not a hard and fast rule. But separating out your contracts so that you can scale them into profit is a solution for holding it a little bit longer. Now, another piece of this is that think about watching the trade move, and that as you get confirmation, you can think about how you want to manage it too, because you can scale in also. You can start small, which is a really smart way to do it, especially with the volatility we're getting lately, where it's really whipping around. Maybe you don't want to hold, like these candles are huge, like 70.1 minute ES or an NQ candles is bananas, right? But that's literally the market that we're trading this morning. Excuse me. So if you get in and your risk is just huge and it's still moving so much, you could choose to get in smaller. My tea. You can take a fill where you think it's going to hold at. And if it moves and your stop really should be down here, but it's dancing, you want to get in small and see if it holds. And then if it holds and it starts to turn up, then you can add as more confirmation comes in. The level that your stop is placed is holding. It looks good. You're getting more volume. You're getting more buy signals. Then you can scale in a little bit too. Say you got in for 2 micros, and then it's really showing you that it's working. The bears are not taking out your stop. Instead, it's holding. It's building kind of pressure, and it's starting to angle up. You can add in 2 more as the trade is confirming, holding, giving you the information that it's going to work. I know it's not always the day for it. And like when we're having these big volatilities, like if your stop loss is 70 points, I don't know how you can add necessarily unless you get a really good adding location. So you need to be careful with that to not take on too much risk. Because if you're adding at the top end of a 70-point candle, that can be a lot of heat you're holding in order to take that trade. In that case, you might want to go to a smaller time frame. So you're going down to the 2 or the 3 minute candles if you're trying to trade that volatility. That way you can kind of see where you need to put your risk. But if the conditions settle at some point, maybe in a couple of years, honestly, you can do this differently. What up, Jaja? 3 minute bars are so fat lately. Yeah. It's the volatility is wild. And so this scaling could even be 1 micro, and then you add 1 or 2 when you get your confirmations. If it's holding, if it's going the right road, you're getting a volume that is pushing your direction. Say you're trying to get in on a bull flag and you're trying to get up. You get a little bearish retracement, small volume, you get a bullish hold and push with higher volume. That's a good sign for the bulls are defending there and are adding more to their positions if you get that volume, that buy volume. And so that could be some confirmations that you need. The longer it holds and it keeps holding and pushing up, that could be ready for a bigger pop there. So you can scale in based on your trade management. If you know that this trade is looking really good and it's holding, my entry is holding, it's not breaking, I could want to take this with a little bit more size. But just make sure when I say a little bit more size, I'm not saying over leverage. I'm saying start like half and then go to full size if you really see what you want to see. That way you're not taking outsized risks for your accounts, because I don't want anyone to get into trouble saying, they take this normal size, but this crazy lady I watched one time on YouTube said to just leverage up when it's holding. You need to always make sure your size fits with your strategy, with your account size, with your risk management for your trading account, so that you don't get into trouble. But full size position is full conviction in the trade, which I love thinking about that way. If I have full conviction and this is an A+ setup and it's holding and it looks good, then I maybe want to be in with my full position size. So that's when you can scale into that, because the momentum is expanding, you have room to go, it fits with the context of your trade. But again, only scale in when price supports your thesis. Never add against the trade, because that is averaging down. That's a different sort of situation. You need to make really good choices on that, because that averaging, adding to a loser is a choice. And there is some strategy around that. I'm not going to even really touch that one, I don't think, but in general, I would say you need to see that your trade is working to add to it, which is not really adding when it's red. More so it's adding when it's just starting to take off and you see a lot of room for the upside and you see the volume coming in on the direction that you're trying to trade. That means the trade is starting to work in the direction of your thesis and you're only in for half size until you could get a signal to add there. Especially if you're front running a little bit, if you're taking an entry where you get a lot of confirmation, but not all of them, then you want to be careful with that. Exactly, Gabber. Only losers add to losers, which that's another phrase that we hear because it's a risky choice. It's taking on more risk when you're upside down from your original entry. And so that's something to be careful with. I'll be careful. Backtesting, you guys. Backtesting is a powerhouse of information. And not everyone has time for this or embraces it or wants to do it. And forward testing just means trading your strategy, right? It's trading it in real time and studying it and making notes. But backtesting is seeing what the market has done previously for certain setups, and it can give you really good information. And I think that is a key part of this, learning what strategies are good for 2 to 3 to 5x target holds. And so I think a lot of times when you're early trader or just based on personality, some retail futures traders ignore their personal trade data when they're choosing their targets. And not every trader does backtesting or journaling or really understand their setups. But if you don't, I would encourage you to try and ease into this world and just do it on a small scale. Maybe you just trade a backtest 10 days and you get your information of like, this setup worked at this time for this entry and it went to this target. And so this could be a really good example of a 3-to-1. So if your best setup averages 65 points, but reverses before reversing, if you consistently only grab 20-point bites out of it, but statistically that move in that context, in that situation, in your instrument will take 65 points and you're only ever taking 20, try for 20 and a 20, 20 and 40, and then try for 30 and 60 or 30 and 50. So that's thinking, right? It's a data mistake is the way to think about it, because my data says this trade should work for this amount of profit, but I'm just going to grab this little bite. And that's where I want you to try and encourage thinking about maybe holding a runner for that more, and having that personal history of your trade setups, your levels, what tends to work is really powerful. You have less guesswork with it because your data is informative. You have numbers to lean on, and numbers take the guesswork out of it. If you can get a strategy that says this produces this, so I want to try and capitalize on that, So If you can fit the time in, if you have a weekend day where you just have time, we're getting into summer, so maybe we want to be outside. But think about it. If you can spend a couple backtesting sessions a month, review a couple months of data, your A+ setups, this support level hold, blah, 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 whatever your A+ setup is. I don't have time to get into that today, but try to see your setups on the charts and measure them from entry signal, what time, how long is the hold, first real reversal, what kind of points it gave, and how long you had to hold for that give. Say if you hold for an hour, you can get 100 NQ points. Obviously today that's a 5-minute candle, but for the, to make it easy on my brain for math, if you hold for an hour, you get 100 points. So then if you're only holding for 5 minutes, you're getting 15, but consistently a little longer hold time gets you that profit. Think about strategy with that and how you might want to modify. Calculate your average move. What is the common center point? If it's 100, but it always goes more than 50, always. But, maybe 80% of the time it goes more than 50 and 50% of the time it goes to 100. You can figure out a realistic target and see if it can line up with something on your chart. Maybe it's VWAP. Maybe it's the hourly resistance from a previous day kind of thing. When you can get those to correlate, more powerful. Build your target map. So you can think about too, when you're doing this back testing, where are my logical scales? Is it, at the 30, say it's a 100-point move. You want to scale out at 30 and 60 and try for 100. And then if it comes back and you only get 85 for that runner, like I would call that a sick win. You know what I mean? Like that. Then you were secured profits along the way. You were able to migrate up your stop loss. That is a beautiful win. But statistics will give you the information on what is the most likely targets to take with this. And then you can fit it within the context of the day, see where those statistics line up with like levels on the chart in terms of VWAP and resistance and stuff like that. So I would encourage you to maybe try for just once a month a backtesting session if it's not a part of your normal routine. Some traders are really good at it and have found the value in it. If you're not sure on that, just try light. If you've never backtested, DM me or any of the coaches, and we can, give you a little bit of advice on where to start with that, just to try gentle and nice and easy on it. See where that gets for you. So then you can start stretching yourself and start taking more profits, which is fun. Like it's so fun to ride a winner. It's uncomfortable because you don't want it to get back on you. That's that scarcity trying to take control of your brain, but it's also kind of fun. And if you can flip from like, I hope this doesn't come back on me, of like, God, I wonder how much it's going to take. If you can flip that from worry to excitement to positivity to faith and abundance and profits and letting it play, and it's a winner or it's a winner, you can make it fun. You can make it like I've won or I'm going to win bigger. And so switching that. Yeah, on DM you, Mary, what about backtesting? So the market pays you to be right and to stay right. Your job is to know from your data how long staying right typically lasts. I love Linda Bradford Rashke. She is a boss lady trader from 30 years now. I love everything about her. But use your data to know how long and how to ride these winners is really a powerful test. So I don't know if anyone backtests. If you do, you can say in there how much you value in it. But every time I backtest, I feel so much better about my strategy, and I hold a little longer the next time because I find that my strategies are good, and it goes to like these reasonable targets today on the charts. Oh, we're getting close to the end where it's almost a power hour. Okay, so practical steps. Let's break it down here and kind of regroup on all the things and bring it around. So holding winners longer is a trainable skill. It's not a personality trait. It's not a failure if you haven't done it yet. It's very, very, very normal to not do it in your first couple of years of trading because you're just trying to not lose in the first couple of years. So start small. Start it with small, deliberate reps. You don't want to like blow out your muscles by trying to lift way heavier than you can the first time you get to the gym. No, start with the weights that you can comfortably lift and go a little bit longer. Add a couple pounds in a couple weeks. The goal is not to go from 1-to-1 to 5-to-1 overnight, because that's too much. It's too much of a psychological jump. It's going to stress you the heck out. You're going to mismanagement and fumble it, and then you could potentially tilt. Instead, small, deliberate reps to stretch your hold window and prove statistically and emotionally that your patience will pay, especially with certain setups. Not in all setups and not all market conditions. So based on what we talked about, based on your setups, you want to predefine your targets before entry, which is way powerful because it takes out that gray area guesswork of what T1, T2 would be, what a runner might look like, and how you're going to manage it. You can write them down, you can say them, you can put them on your chart immediately. Justin does an excellent example when he is showing his charts of when he's in, he places his stop fast, which I absolutely love. He does not place his targets fast because he wants to give the trade a little room, I would assume, and controlling the risk is important for account stability. But you get in, you can just put them on your chart, whether it's a line or you just literally place the orders. Then it's defined, right? It's defined at entry. It's on the chart. You don't, when it's visible, it's not as gray. Now, when you get in, it starts moving your direction, secure your base hit, scale out at your 1-to-1 or at a logical point. Like I said, if 1.2 is view up, you scale out at your logical point that is reasonable, within range, highly likely to get hit. Now, the runner can fail and it doesn't cause pain in that situation because free money is easier to hold, right? If you get to one target, you lock in some green on your P&L, which maybe you don't need to look at for this, but it will be green, and then you can move your stop into profit. If you're trying to push yourself, maybe this is where you are more aggressive on stop management so that this can be more successful as you grow. That safety will create the patience. It's easier to be patient when you're not going to go from green to red. It's not all or nothing. Instead, it's like, I locked in some green. I'm not going to go to red. I'm okay. Breathe. Maybe a year ago, I couldn't even take 150 points. Now I've got 150 points locked in and I've got leverage on the table that's free. Much better place, right? That's where you can make these small increments of like allowing it to grow. Now, also, if your statistics show that sometimes this works, more often than not, it works, but it might take 2 hours, which is why I say when you're back testing, time how long it takes for your trades to hit in these certain setups so you can help you stay patient. Because if you know that the specific setup has a high probability of getting to T3, but it might take 2 hours, in that situation, kind of trust it, walk away, take a quick break, and then come back and then see what you need to manage. And reducing that screen time can reduce your like micromanaging of it, clicking too many buttons, taking it out, feeling scarcity on a little bounce. It helps if you're trying to do a longer hold time. And then journal this because that's forward testing, right? Trading the trade setup and seeing the outcome. Make notes on it, what it worked, how far it went. I got out at this point, the stop out, it did go this farther, or my stop management was good because it actually did reverse at that point. So this was good, blah, blah, blah. Make notes. Do you break even? Whenever I hold a winner, break even on position, we'll come back and hit the break even and run again. Yeah, I think that I don't always go straight to break even. When I manage my stop, it's based on candle closures most of the time until I get above that. And then I might leave it at break even. So say I do like, if it's early in the day and I have a lot of time, I'll do 5 minutes. If it's towards the very end of the day, I'll do like a 3-minute. But when the candle closes in my direction, I will snug my stop up under it. So the first snug might not be to break even. It might give it room. This morning, I got stopped out a couple of times because I did that and the trade worked and I was stopped out on that strategy. So it doesn't always work, but no strategy is foolproof either. You just have to have a risk that you're comfortable with. And break even is kind of sometimes the sweet spot of it didn't go red. Even like a point in profit is the break even that covers your commissions and even locked in like, $5 on the micro because you put it just above. Sometimes that feels better psychologically. So figure out what works with you. But I would say once you're starting getting into profit, the ability to hold longer will be easier when you protect your downside because then you're not going to go back against you. And as you grow into this, it's helpful to tighten up your stop a little as the trade is progressing. Okay, so mindset protocols when you're in the trade. Strategy gets you in. Mindset execution keeps you on plan when the trade moves. So that's where I want you to try and write down like some strategies and then be consistent with it. So after take one and break even or stop snugging up, tell yourself, I've already won this trade. The winner's a bonus. Like that's how we can keep ourselves calm. Like this trade won and I believe in myself and I believe in this trade. And if it runs, that's going to be an awesome bonus. And if it doesn't, I'm still good. So keeping yourself level psychologically and focused on the plan and not into that emotional, God, what if it comes back at me? It's unrealized, talk to yourself a little bit on the positive parts of it. So focus on the process and not the P&L. So this is where we talked earlier too about hiding the P&L if it makes you feel some kind of way. So if you have a strategy that says these are the points where I want to take my profits, and this is how I manage it based on the strategy, watching the P&L can stress you out, especially with these massive swings that we're having. watching the money fly from 600 to 200 to 1200, whatever, can make you want to micromanage it. But if you just want to trade your strategy based on your back testing, you shouldn't look at the money. You should look at the candle closures and the data that it's printing and where you need to manage it based on the information. So consider hiding your P&L for this growth period as well. You can do a pre-trade contract where you write down and you commit to it ahead of time, like writing it down on a paper journal that this is my plan, and that will help you hold to it too if you are getting some kind of way with micromanaging even when you don't want to. And then I love this question. What would I tell a student? So when you're tempted to manage it early, this has helped me when I'm live trading of like, well, people are looking at me like, well, if I say it, then I want to do it. So that makes me consider my words more carefully and my trade management, because I'm like, what if someone else is thinking about how they're holding this short? How would I hope that I can do my optimal trade management if someone is watching or listening or considering asking me a question? I want to think to myself, for you guys too at home, like, what would I say if someone were watching and asking me questions, you know? You guys, it's power hour. Let me just have a quick minute and I'll finish this up, okay? I don't want to get to the charts. I'll DM you, Mary, and if anyone else, hit me up about journaling. It's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong. So this is the last slide. Trade management model. So everything fits into a repeatable system. You want to be systematic, psychologically sustainable, and built around your personal data. So adapt your instruments, session times, back testing results, let it grow over time. So you don't want to try and hold a trade forever, because I don't know that that's strategy, but hold the right trades for the right amount of time based on your data and not fear. So I think that is kind of the crux of all of this, is you can learn to hold winners, but it needs to fit with your thesis. It has to be in contextually a trade that has the potential to run, and it's not a choppy day where it's taking everyone out. And you want to hold it, not trying to hold it for the moon, because trades don't generally last for the moon. There will be a counterbalance play at some point. So have data and an understanding, and like try and just get the 2-to-1, 3-to-1s first and document that and say, I took 3-to-1. I'm really proud of it. It did go 5-to-1. How could I have managed it slightly differently to take that next time? So track your data and backtest, forward test, make notes, and try to slowly start pivoting and adjusting and use micros, manage your risk the whole time. Yeah, I kind of got deep into it. I nerded out on this one and I ran a little late, you guys, but I'm really thankful for you all to be here with me today. I went a minute or two over, so I'm going to pivot so we can get on some charts to end out this day. But when we switch to power hour in a minute, it's going to be Matt and I. So I will still hang around. If you have questions, you can hit me up. We can chat a little bit more after we're looking at the chart as well. But I love this for us, and I think it's a great approach to trading and a way to expand once you get past just figuring out how the heck to even get into a good move. This is kind of next level stuff. So watch us back on recording if you want, if you have time. Otherwise, you guys, take care of yourselves as traders.
Blue Sky Technical Lab. This is Coach Matt, ladies and gentlemen, and I got a pretty interesting topic here today to discuss in the Technical Lab. Something near and dear to my heart, something I love talking about, love trading, love breaking down, love doing, and that is a good old-fashioned reversal in the market. And reversals can take a lot of different shapes and sizes. We're going to talk about the different ones. We're going to talk about the types of things we want to see as we go through a reversal analysis. But if there's one thing that I believe that most traders love doing, it's catching a reversal. The earlier you're in the reversal, the better opportunity, the better the reward to risk ratio, the better the probability. And so understanding reversal analysis is as much art as it is science. You know, when you're talking about a confirmation of a trade, for example, it's all math. 2 + 2. Does the candle get above the high? Percentage of the ATR above that level? Let's giddy up and let's go. There's a simple process, mathematical equation when it comes to the execution of your trading systems. You have levels, breakouts, retracements, all these different patterns. But in general, I think one of my favorite patterns in the market, because not only is there a good reward to risk ratio perspective, but how I feel about it is really, really simple, guys. As a trader, I'm not just looking to catch a trade. Oftentimes, I'm looking to start with that in mind. Hey, let's just catch a trade. Let's go level to level. Let's do the same things everybody else is doing. But I love catching trends. And the very beginning of a trend is the exact point of the ending of the previous trend, and that is a reversal. Now, reversal patterns and continuation patterns are extremely similar to one another, and that's where the art really comes into equation. That's where the breaking down of the step-by-step process as you understand a reversal formation can be really, really, really powerful, because oftentimes in the early beginnings of a reversal are the exact same things as what is called a continuation pattern. And so you have reversal formations that reverse the previous trend, and you have continuation patterns that continue the previous trend. And so what I want to talk about today is specifically those patterns that form up the reversal situations. And so technical reversals are simply a pattern that changes that ends the previous trend and is the beginning point of a new trend. Whether you're talking about bullish reversals or bearish reversals, it's not like you got to learn completely different patterns for the bull reversal as you do for the bear. For every bullish pattern out there, you flip that chart upside down and there is an equal and opposite bearish pattern. So for every M formation, you have a W formation. For every head and shoulders, you have an inverted head and shoulders. For every V-shaped recovery, you have an inverted V-shaped recovery. Now, those are the core three. There are three core reversal formations that we track. You talk about V-shapes, W formations, and head and shoulders. You talk about head and shoulders, M formation, and V-shapes. They're three core, three for the bull, three for the bear. There are fractal patterns within reversals, but we're going to talk about the core patterns. We're going to talk about where to take action in those core patterns. And I also think there's been some pretty decent case studies this week, including one yesterday, one on Tuesday, and one on this morning, quite frankly, that we can break down. And I felt like the reversal topic today was a very, very, very important topic to understand, because when we look at the overall market right now, a lot of this is about kind of your personal expectation. But when you come out and you look at the overall market from a little bit of a bigger picture perspective, you can kind of see how the market has been trending very, very, very well for a very long time. But what that's also done is gotten to the point where we're seeing general overextension set forth in the market itself. And when we're going through a little bit of general overextension, a lot of times in the backdrop of that general overextension, you see daily patterns form up that are more consolidation based. And I talked about this earlier in the week in the power hour, but as of right now, I got the NASDAQ and the ES as a daily consolidation pattern. And as you're going through a daily consolidation pattern, what you see oftentimes on the intraday is neutral ranges. You see these neutral ranges set forth where the market's going to go up to resistance, back down to support, up to resistance, back down to support. And as the intraday plays out that way, goes down to support, up to resistance, down to support, up to resistance, what that creates is the backdrop of neutrality on the actual longer term side of the equation. And so when you're looking at neutrality in the ES, and I'm talking neutrality on the intraday side of the equation, the daily chart is still in a bullish uptrend on both the ES and the NQ, but we're starting to see overextension on the daily chart. We're starting to see hesitation on the daily chart. We're starting to see a little bit of consolidation on the daily chart. We're starting to, I mean, my goodness, today we got Broadcom. First AI name in weeks with a negative impact on earnings. First time. And in that first time, we saw rotation go from NASDAQ to the Dow Jones. We saw rotation go from technology to finance, from technology to industrial, from technology to, there was another healthy sector we were seeing rotation, finance, industrial, and healthcare were the three. So we saw rotation a little bit from the very top of the market to a little bit of the bottom areas of the market to shore up that. By the way, that's a pretty standard bullish like condition where top areas of the market see rotation, profit taking, and they flow into bottom areas of the market that have not seen a lot of pump in the last little bit. So we're seeing a little bit of those early sector rotation models play out right now. And as such, again, what we've seen kind of impact on the top end of the charts, and I'll just kind of show it to you here and toss very quickly. But when you look at the top end, well, what are we starting to see here? We're starting to see a little bit of slowing momentum at the top. We're seeing a little bit of consolidation here. We're seeing battles here that we did not see in the early innings of this wave. We saw battles here that we did not see in the early innings of the wave. And so you're starting to see the top end get dialed in on the overall S&P 500. You can say that same thing on the NASDAQ. And what that's done is create a neutral condition in the backdrop of the intraday charts that we love to trade and love to stare at. And so I just felt like today talking about reversals, because as a swing trader, reversals are a little bit rare. As an investor, reversals are rare. They take a lot of time to really dial in. When you're talking about reversals on an intraday side of the equation, when the daily chart is going through consolidation, we could get these things multiple times every day, quite frankly. And so that's kind of what we've seen play out. I felt it was a pretty good topic to discuss here today. I also want to talk a little bit about RSI and MACD and talk about it through the lens of divergence, because in a couple power hours earlier this week, we had a conversation on divergence, and divergence can be a very powerful 1-2 punch. When you're looking at the reversal play out and you're trying to determine, is this a bullish reversal? Is this a bearish reversal? Or is it a continuation pattern? And we're having those technical debates in our head. I'm pretty sure all of us do. Every one of us, if you have technical debates in your head, let me know in chat, because I certainly do every single day. Is that a reversal? Is that the clean level? Is that this? Is that that? Let's go through the process. Well, one of the things that can help me understand the quality of a reversal versus continuation is MACD converging or is it diverging? Is RSI converging or is it diverging? What do those secondary indicators tell us to help us understand the context of price action? And Jaja, I'm right with you. Those voices, we got the angel on the right shoulder telling us one thing. We got the devil on the left shoulder, and our, trading is really done between the 6 inches between those two voices, right? You got the left shoulder, you got the right. You can also put it like this, Jaw. On the right-hand side, you got your creative minds. You got the creative side telling you certain things. On the left-hand side, you got the analytical voice in your head telling you certain things. And that's what you're trying to comprehend between that 6 inches between those ears, is to understand the context of that analytical versus creative conversation. And so Market Mamas, i.e. Coach Becky's the one who gave me that little thought up there, but it's that context that the indicators can give us to help us understand what are we really seeing out there. Because a lot of times in reversal, there's a shift in momentum. And when there's a shift in momentum, certain traders are going to see that through the lens of bullish continuation. Other traders are going to see that through the lens of bearish reversal. Where's the truth in that? Because great technicians can disagree. Where's the truth in that? Well, indicators can help us understand that context. And so I definitely want to talk a little bit about divergence as well here. And so when I'm looking at things technically that make up the hallmarks of reversal analysis, there's certain things that occur from a technical perspective that makes you start thinking about reversals before the reversal even occurs. And I know every single one of you have done that. I certainly have. We have our level, we have an opinion at the level, and we're like, yep, that's going to reverse at that level. Well, that's your opinion. Your opinion doesn't matter to the market. And I know that's tough to hear, but guess what, guys? The market doesn't care about my opinion either. It doesn't care about any one person's opinion. The market's too big for that. And so it's, you have an opinion, but does the market share your opinion? That's what we have to really kind of focus on, is understanding the process that the technical analysis goes through to help us get to that ultimate confidence on that reversal. Because you're in a reversal, guys, you're going against the trend. You're saying this is the end of the trend and it's the beginning of the next trend. That's what you're saying. Whether you're right or they're wrong, the market's going to have a say in that. Well, everything that goes into a quality reversal, you don't need everything, but these are the things that you typically like to see to give you that confidence in a reversal. Number one is, and I don't have it here, but I will just say this as a day trader. Number one, high quality level. Like you typically see reversals. They typically don't come out of nowhere. They typically don't just happen through a catalyst, because in a catalyst event, you typically see what we call a V-shaped recovery. And V-shaped recoveries from a trading side of the equation, I don't want to say it's a new pattern, but it's certainly a much more popular pattern over the course of not just, the headlines we get on an intraday side of the equation due to the Iranian conflict and presidential updates on that side of the equation. But it's been a pretty compelling pattern ever since the pandemic, quite frankly. And so before the pandemic, I really felt there were two very important reversal patterns. You had the M formation and its cousin, the W, and you have the head and shoulders formations, both the head and shoulders and the inverted head and shoulders. Post-pandemic, we do see more V shapes. And as algorithms become a more important factor for the market, we see more V shapes. And as AI platforms start to come on and the speed of the market increases even more, we will most likely see more V shapes. And so the V-shape reversal is typically a reversal that is driven through a catalyst. Whereas the other two, the W and its cousin, the M, and the head and shoulders variety, those are more traditional, more standard technical type situations that also have some time factors to them. V-shapes quick, the other two not so quick. And the reason is because to create a high quality reversal, It's not just about your level. Your level's number one, absolutely, but it's not just about your level. It's about the momentum coming into your level. What's happening with trend momentum coming into your level? What's happening with the pivot formations within the backdrop of that reversal? The pivots, momentum's going to tell us a part of that story. Pivots tell another part of that story. And so when we're talking about a high quality reversal, such as an M, a W, or a head and shoulders, there's going to be a time factor in that because you have to have pivots. And pivots have minimum time durations to them. For example, you can't have one candle equate to a pivot, or every single price point in the market would be a pivot, and it would drive us more crazy than social media posts. And so we want pivots have minimum durations to them. You have to have a minimum duration of 3 bars within a move to create a pivot. So these are the early stories when you're talking about a reversal, is you're talking about understanding the concept of momentum. So it's all about the level. That's number one. Where's your level? Is it a multiple time frame level? Has it been tested many, many times? How high quality is that level? Number one. Number two, what's the momentum going into that level? Are bears losing momentum coming into a support? Are bulls losing momentum coming into a resistance level? That momentum is going to tell a little bit of the story. But at the end of a technical day, nothing tells the truth like a pivot does. Because when you talk about a bullish uptrend team, pivots increase. Resistance gets broken constantly in an uptrend. Resistance is the number one thing that gets busted up in a bullish uptrend. Resistance here gets broken. Resistance here gets broken. Resistance here holds. When resistance holds, that trend is over. You should not be relying on that previous trend the very second resistance holds, because it's no longer part of the equation. Once resistance holds, you are now firmly entrenched in some degree of neutrality, and that some degree of neutrality is going to depend on whether it's a bullish continuation or whether it's a bearish reversal is going to be what happens next. And so in the early innings of reversals, it's really about momentum, and it's really about understanding pivots. And so when you look at momentum team, momentum can be looked at through a variety of different lenses, obviously. The type of momentum I'm talking about right now is not necessarily candlestick momentum and catalyst momentum and bar by bar trading and high bases or flags, or I'm talking about trend momentum. When you start to see waves decrease in their ability to go up, you're seeing momentum shift. And so as if a market goes up, say 20 points, and then goes up 10 points, and then pivots at 10 points, you're seeing momentum shift. And so when you're looking at momentum, you can track this through 2 different varieties from a trending perspective. Number one, you could look at it from a breakout to the next resistance. So a market breaks out, how far does it run above the breakout channel? If in wave one, or in example one, you run 2 points and then you run 4 points on the breakout, that's a sign of bullish continuation. So if you have increasing momentum going into a resistance level, you're not exactly going to be looking for a reversal there, team. The first thing you're going to be looking for is a bullish continuation pattern, because bulls have momentum. You never want to fight that momentum. You never want to go against the market. You always want to trade in the direction of the prevailing momentum. And you definitely always want to trade in the direction of the trend. And so when you're looking at the momentum, the first thing you look at is kind of resistance to the next level of resistance. How far can it run before it gets tired? And I think that's a great point, Nacho, because it's also about understanding the consistency and the volatility there. Are we dealing with a sprinter, and we got to be a little bit more aggressive, or is this more a methodical walk around the park type situation? You know what I mean? And so momentum is going to be a very interesting situation, but you look at it from resistance to resistance to resistance. And if resistance is expanding, those bulls are feeling froggy. they're feeling froggy. Whereas if momentum starts to contract, you're seeing the opposite impact. They ran a sprint, Nacho, and they got tired. So for example, I'll give you another analogy. Team, if you got up outside your chair staring at these amazing computer monitors that all of you guys stare at, and you went outside and we all touched some grass for about 5 minutes and we ran a mile as fast as we could, would we get a little tired? Would we want to put our hands on our knees a little bit? Would some of us maybe want to take a nap? Like you're going to get tired. And markets get tired too, guys, because markets, we're looking at the collective emotion and pricing of everybody in the market. So as the market runs 4 points and then it runs 2 points, I'm not going to suggest that the market now has the ability to run 2 points when it just showed me it can only run 2 points. And so the market shows that to you through the momentum shifts. And so you have increasing momentum, which puts you on the radar for bullish continuation analysis. And then you have the opposite impact of that, which is slowing momentum, which gives you the understanding that the market's getting exhausted. The type of momentum we want to see as we're coming into our level that we want to see through a reversal lens, we want to see slowing momentum. Now, the second way to determine momentum, again, indicators can help us understand the concept of momentum, but I wouldn't look at indicators to give me the initial read of momentum. I always want to do that from a price perspective. I don't want to pull up secondary indicators just to make sure that, well, what does my indicator tell me about momentum? You can read momentum on the chart. You do not need an indicator to tell you about momentum. It's very clearly established on the chart. You can see it through through resistance levels expanding. You can see it through the natural Elliott wave cycle of wave counting, and from the support pivot to the resistance pivot. You don't need a secondary indicator to tell you what's happening with momentum. But what the secondary indicators can do is confirm your natural read of the momentum. So if we're talking about coming into a major resistance level on the intraday side of the equation, and I have an opinion there, I want to make sure that we're getting a decreasing momentum environment to show me that those bulls are getting tired, that those bulls can't carry anything any longer. And then when it double tops here, you start to see the ending of the trend. And so when you're talking about momentum, momentum is that early warning sign to helps us understand if the level is going to give us some reversal analysis, or if that level is going to give us some continuation. Increasing momentum going into a resistance level, I'm going to be looking for bullish breakouts. Decreasing momentum going into a reversal into a major level on the intraday, I'm going to be looking for reversals at that point. Right now, I'm looking for more reversals than anything on the bullish continuation side of the equation or bearish continuation side, because the market hasn't proven it can break out on the daily chart. And if the market cannot prove it can break out on the daily chart, what am I thinking it's going to break out on the 1 minute chart for? And so until this market breaks out, I kind of feel like reversals are going to be a really good pattern. And that breakout might take 3 days to occur. That breakout on the daily chart might take 3 weeks to occur. I don't know. It's our job to trade what we see and not complain about the environment we have. So once again, you have 3 basic reversal patterns. You have the double top, double bottom. That's the M and the W. You have the head and shoulders, which is the head and shoulders or the inverted head and shoulders. And then you have the V shape and the inverted V shape. Now, when you're looking at the double bottom, double top, guys, it's very simply put a holding of resistance or a holding of support. Once support holds, once resistance holds, and we have equal pivots, we are absolutely hunting the double bottom or the double top. So if the pivots in a reversal are equal, this is a traditional reversal type situation. If the pivots in a reversal are offset, it's either a head and shoulders or a V shape. And so when we're talking about the cleanest reversal patterns out there, they're going to be the ones that pivots tell a very clean and compelling technical story. Because if it gets dirty from a technical perspective, it's going to take a little bit more time to clean that up. And so when you're talking about the reversal situations like a W formation, what you typically see is the market's coming down, 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 and typically it has a little bit of momentum. And let's say we have an opinion down here where you have a major support level. Well, you have the contract goes from all the way up here to all the way down here, and then it starts doing this number as it gets into support. Well, as you start to see that play out, where the waves get contracting, and the expansion of momentum from the breakout of support to this support level starts contracting, that's the sign of momentum shifting. And that's very important, guys, because if the momentum doesn't shift here, you're going to see something where it's more like this, where it becomes a little bit more difficult to process, I would say. And so as you get the momentum shift coming into a key level, at this point, it's really about understanding how that story gets told. And so that first pivot that establishes the support level, that's not this level we're trading off of, guys. I know some of you love to put a limit order down at a level that you have a strong opinion on. I'm not saying anything negative against that. I'm just saying that's not a reversal. That's not a reversal pattern. That is, you have an opinion at a level and you're trying to maximize your reward to risk ratio and you're giving up probability to do it. That's a different philosophy. It's not a reversal. You're doing it a little bit different. And again, I do it too. Everybody does it. You have an opinion at a level. You want to maximize your reward to risk ratio. And as you maximize your reward to risk ratio, you're going to give up your probability. Because if you're going to have a cheap risk, big return opportunity, you never have probability on that. That's 2 + 2 when it comes to market mechanics. Every time you have a higher probability in the market, you're going to have a little bit less of return. You're going to have a less return, bigger reward to risk ratio. Anytime you have a low probability situation, you typically have a little bit more return to get, but you're not going to game the system that is more effective and efficient than you are, team. And so if you're putting an order at a level, again, I'm not trying to talk down that in any capacity. I'm just saying that's not a reversal. That a reversal is tracking a reversal formation and waiting on confirmation on that reversal. And so and you only get a proper reversal with pivots. And so the first pivot that gets established, that's just telling you that that support level is a viable, great support level. You come back up, and then the very second it holds that double bottom, at that point, that trend's over. The previous trend is over, and we have a new trend. But we do not know what the next direction is yet. Because let's say something like this occurs where the pivot holds, comes back up, but then constantly decreases resistance. If resistance is constantly decreasing, you don't have a reversal, team. You have a bearish continuation pattern. It's the pivots that tell the story of the difference between a reversal and a continuation pattern. So support holding is kind of step one in the formation of a reversal. Step two would be to understand what happens at resistance. Does it come all the way back up to the previous area of resistance? At that point, you have equal pivots at resistance. You should be looking for bullish breakouts. You should be ready for any time you break back up, because at that point, you are starting a new trend. Whereas if you decrease resistance against the backdrop of that reversal, once again, bears still have control. It's the pivots who tell us who has control. And as the bears had control throughout the trend, and then they had control throughout the pattern, they should have control in the next trend as well. And so it's very important for us to see that come back up into resistance and then break out of resistance, because the breakout is what establishes the trade, and the breakout is what establishes that next trend. The head and shoulder formation is a little bit different, because the thing that occurs is you get your slowing momentum in the trend, and then it increases support. Once it increases support, you now see it through the lens of bulls have control. This is the first increase in support. Now it's just a matter, and I heard Coach Breezy talk about this the other day when he was talking about the neckline. When you get above the neckline, that's where the real trade is. And so if you're front running, you certainly like an increase in support in a front run, and that would be a viable pattern to front run an ultimate reversal. I like that a heck of a lot more than just buying a support bounce in a downtrend. And so you see that increase in support. That's a really good situation to front run that little move. Whereas the second trade is when it gets above what's called the neckline. And the third pattern that we talk about in reversals is the V shape. Now, the V shape is a newer pattern in the market. M formations, W formations, head and shoulder formations have been around for 100 years. V shapes are a little bit more new to the way we navigate the financial world. The V shape recovery is the right side of a head and shoulders formation without the shift of momentum of the left shoulder. So remember, a head and shoulders formation goes left shoulder, head, right shoulder, break out of the neckline. So literally tracks head and shoulders, knees and toes. Let's go. Let's sing some songs. But when you're looking at a 1-2-3 reversal V-shaped formation, you don't have the shift of momentum. Remember, these are catalyst-driven patterns on the 1-2-3 V-shaped recovery. And so you don't have any momentum shifts. It comes into a level, and all of a sudden it increases support and it lifts off. And so the 1-2-3 is a very similar to a head and shoulders formation without the momentum shift in the previous trend. Now, let's go talk a little bit about some of those reversals that we saw earlier this week. Now, when we're looking at kind of earlier this week, team, I kind of felt like there was a couple very interesting reversal situations that were brewing right here, and then obviously as we see up here at the top side as well. Now, when you're looking at this overall neutrality earlier this week, let's kind of look at it right here. When we're looking at this earlier neutrality this week, guys, this is the level right here at the 75-76 level, which is a very important level for the S&P 500. It was a breakout level today. It was a reversal level earlier this week. It was a breakdown level with a tremendous amount of chop yesterday. It's a level that's been playing out all week long. On the flip side, the top side of resistance right now is 76.30. And so you had a range for the most part of this week between 75.75 and that 76.30 level. And markets for the better part up until today, and really kind of a little bit yesterday, just up to resistance, down to support, up to resistance, down to support. And I felt like here, this reversal here, more on the 1-2-3, comes down, hits support, holds support, no momentum shift to the left side here. Let's get a little bit bird's eye view right there. So you see how this one here is just down, all the way down, straight down like a rock, down to support. Now, the first thing that we typically see in a reversal is a shift in momentum. If there's no shift in momentum, you're most likely going to see a V shape is what you're most likely going to see. And that's exactly what kind of played out here. There's no pivots here, team. That's consolidation. There's not an official pivot there. Remember, reversals have pivots. V-shapes are volatility events that are driven through catalyst. There's no pivots here. And so you hit support, consolidate, break up. That's your first signal. The pullback would have been your second signal. And then you see that momentum back up into resistance, come right back down. This second situation right here coming in, I believe it was on Tuesday of this week, this situation right here was a very, very good reversal. And it told the entire story very, very well. For example, you have a situation where you're coming down with some momentum. So you see kind of this level right here. So this is your initial move. This is your secondary move. Do you see how the second box is less than the first box? So when you're tracking momentum, you can either track from the breakdown to where it gets extended, the breakdown to where it gets extended, or you can track the wave itself. The wave goes from resistance to support. And so if you're just take one thing away from this conversation of momentum, there's two ways to track it just from a pure price perspective. Obviously, indicators and other things out there as well, but either the wave, meaning resistance to support, or the breakdown, breaking of support to where it gets overextended. However you parse it, whether you're parsing it through the breakdown to the extension, the breakdown to the extension, or you're looking at the overall wave, I think we can all agree that this is slowing momentum as we come into a key level of support. And so as we're coming into that key level of support here, this is where I personally start getting excited about reversal type situations, because as you come into that key level of support, I already have the momentum shift, which tells me that the bears are losing momentum. That's what it tells me. Bears are losing momentum coming into a key level of support. If I'm a bull, I like that. I like it a heck of a lot more than this type of situation where it's all a volatility nightmare, where it's a speed to the downside, consolidation without any pivot confirmation, without giving you any aspect of the story. It's just volatile. And people are saying, well, I think it's going to go up because we're closer to support, or I think it's going to go down. That's not system trading. That's not rules-based trading. You have an idea in your head and you go do it. That's not technical trading. This over here, slowing momentum, double bottom, double top, breakout, that is a reversal. This nice little W formation right there after the slowing momentum, confirmation candle, catch the 9 EMA on the 15-minute, and let's giddy up and let's go, go, go. That to me is a high quality reversal. This to me is a volatility nightmare. The difference is pivot formations. Pivots tell the story. Here, there's not one pivot other than the pivot at support. The next pivot is the increase in support. There's not a resistance pivot here. This is just volatility. This is a clean story because pivots. So one was a volatility nightmare. The other one was one of the cleaner situations we had. What was the telltale difference? They both had the same level. They both had heat coming into them. The difference was the momentum shift. You had a momentum shift coming into that level. And when you have a momentum shift coming into that level, the bulls are going to spot that literally without binoculars, without the sight. I shut your eyes off. You could trade that pattern. Literally, that tells such a compelling pattern. Now let's fast forward to kind of later on this week. So let's just kind of fast forward here. This is a bearish continuation. Why? At no point did you ever see an increase in resistance. And guys, we made that trade yesterday in Power Hour. Becky made that trade. I made that trade. We made that trade because we felt we were getting a reversal. Ultimately, the 15-minute chart never got back up into resistance, held firm, lowered its level of resistance, came right back down. So we were trying to get in front of that. We were trying to front run that larger reversal based on the lower time frames, but ultimately never reversed. We were just being aggressive off the low point. Again, I'm not trying to say you can't be aggressive coming from the low point. We were literally doing it yesterday. What I'm suggesting is it's not a reversal unless you have the pivots tell you it's reversal. And quite frankly, the only thing we had here was a little bit of slowing momentum, and we did get that quick reversal. Now, again, I'm talking on a 15-minute time frame. There was a high quality reversal in the 2 to the 3 minute time frame, but I'm talking a little bit more of the 15-minute chart, 5-minute chart, a little bit more my standard style. Now, you come into today here, and I felt like today was certainly a reversal, but there's one thing to add in the conversation here today on this high quality reversal today. Time in pattern. Let's talk about that very quickly. why is time in pattern so important? Because where V-shaped recoveries are very, very difficult to trade. Time in pattern is it turns reversals into consolidation trends, into neutral trends. And when they break out of those things, they become pretty stinking good, quite frankly. Because the longer the time in a reversal, it plays for the bulls. Or it like at the top side, the longer the time in a reversal at the top side, it plays for the bears. The longer the time in a reversal at the low side plays for the bulls, because the bears had the edge coming in. They had the edge. They saw a shift in momentum. And now that shift in momentum here from what we were seeing earlier in the session yesterday, look at how it kind of flatlines here. Support holding, support holding, support holding, support holding. And what occurs there, team, is divergence. See, divergence doesn't happen oftentimes in V-shaped recovers and volatility events, because oftentimes the speed is too much. And by the time the move is done, the indicators haven't even caught up to that. But when you get quite a bit of time in the reversal, you can start to see other things get dialed in there as well. And one of those things that is an early sign for reversal analysis is the concept of divergence. Now, what divergence is and where it plays a role in reversals is when we have an identification of a reversal pattern and we go to our secondary indicator to confirm that reversal. Divergence helps confirm the reversal, because most of the time you're looking at indicators, you're looking for indicators to basically reaffirm your opinion of price. In a reversal situation, price is coming down, 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 but in divergence, you're seeing it start to go up, 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 because it's confirming the momentum shift is what you're seeing. That's what divergence really does, is it confirms that momentum shift to a certain extent. And so what divergence is when price is coming down, but the indicator starts going up. And it's really when you're looking at support. So support pivots are pressing down or equal. So divergence is support is pressing down, support on your indicator is pressing up. And so here you got support pressing down, support pressing up. That's putting a lot of pressure on those bears and for the bulls to take the edge there. And so divergence is an early warning sign. On bearish reversals or on bearish divergence, price is pushing up, resistance is going up, but what's happening with the indicator? It's going down. What's happening there, guys, is the momentum is shifting on the price and the indicators confirming that the momentum is shifting. You don't get divergence without a shift in momentum. And so if you're having a difficult time reading the natural state of momentum on the price perspective, which can be a little bit difficult because there is some degree of interpretation there, pull up your indicators, pull up RSI, stochastics, MACD, whatever your favorite indicator is, because divergence works pretty much the same on all of those core indicators. If resistance is going up in price, but the pivots in resistance are going down in RSI, that is divergence. Same thing happens on MACD. As MACD price is coming down, MACD histogram has already shifted, showing you that clear shift in momentum. And that clear shift in momentum is extremely important for me as a technician, because I might not be the earliest in the trade because I got Jesse Livermore living in my head. I like confirmation. I like confirming patterns. I don't like being too aggressive inside pattern development. I like being aggressive as we break out of patterns. And so a lot of understanding the reversal is understanding the story that we're seeing play out there to put us in an environment where we're ready to take advantage of the break or the breakout when it occurs following the divergence. So you see divergence over here, price pressing down, indicator pressing up, ultimately price breaks up. Divergence here, price pressing down, support pressing up, ultimately a reversal, break back up. And so regardless of the indicator that you're looking at, divergence can be a very helpful tool in helping us understand the nature of these reversals. So let's go to the first one here, and let's just look at it from an indicator perspective. So let's go over here and let's look at RSI first. Actually, let's look at RSI first. All right, so price is coming down, 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 down. So far as price is coming down here, the indicator is doing nothing but confirming that. Now, as price comes back up, you got a slight increase in support right here. You have a slight increase in support right there. There is no divergence here. RSI told a very clean story of the price, but there is no divergence because the price and the indicator were doing very similar things. Well, let's look at over here in a standard reversal. You have a momentum shift here. So from right here to right here, what do we see on the indicator? We see it flat. As it pivots here, what do we see here? An increase in support. So when you're looking at divergence here, guys, kind of looking just kind of right here at RSI, right here, flat, price is coming down. Right here, pivots are equal, pivots up. That shows you bullish divergence. And when you see bullish divergence, you got to be ready for that breakout, because that's what it's giving you the sign about. Is it's giving you an early sign, because the divergence happens inside the pattern, guys. And so you see how we're going through that double bottom, double top. Confirmation is all the way over here. So you're going through a double bottom, double top, and then you see that first breakout. Well, we're already at 45 on RSI by the time that first breaks out, which means when you see that early sign of divergence in the reversal here, yeah, can it still break down? Of course it can. Price can do whatever it wants to do. But what does the indicator tell us? What does the price tell us? What does the momentum tell us? It's trying to tell a story. And that story is not just what we like to fixate on sometimes as day traders and just look at the micro level and the micro analysis and the one candle and be so fixated on that one candle that we're missing the story that the market is trying to tell us from an overall technical perspective. And so I wanted to talk today about reversals for a couple reasons. We're living in an environment where we're going to see, in my estimation, more chop, more neutrality on the daily chart, more of a cash flow environment, in my opinion, in the leadership of the market as of right this very second. And so I don't expect a lot of downward pressure, honestly, unless some other catalyst comes out. I expect a little bit of consolidation at the top end of the market here. And as such, on the intraday side, when you see the daily chart get extended and the daily charts start to go a little bit neutral, that creates a lot of compelling intraday reversals to track. So I wanted to have that conversation here today in the lab. I hope you guys had a wonderful, wonderful time in the lab here today. I hope you guys learned a lot about how I see reversals and how divergence plays within the backdrop of those reversals as well. What does ServiceNow tell us? ServiceNow, from a divergence indicator perspective, it's confirming. It's confirming, Vodka. It's confirming bullish uptrend, increase in pivot. And so it's converging. There is no divergence as of right this very second when you're talking about ServiceNow. Divergence doesn't happen oftentimes within the developing trend. It happens typically at the end of a trend. Jaja, I need you to digest AVG earnings when you come back. We'll talk about that in Power Hour. Jaja, absolutely. I certainly have a take on Broadcom's earnings. One of the reasons, Jaja, I keep saying I expect consolidation at the top end of the market. That's a little bit of Broadcom's earnings. No lie. That's a little bit of Broadcom's earnings, because that was the first earnings report we've seen on the AI trade out of a catalyst stock in the AI trade to give us any degree of hesitation on the AI trade. which is the dominant trade in the market by a country mile. And so Broadcom gave us a little bit of an early warning sign there. By the way, I do not have a negative take of their earnings. It's very difficult sometimes to achieve high bar expectations in the market. And I would certainly say Broadcom is suffering due to that. But we'll have that conversation in Power Hour, and we'll be back with Power Hour and more from BluSky after we get redialed in and we come back with an awesome conversation for Power Hour. So team, if you need, this is a great time to go up and refill that water and come back. And when we come back here in about 5 minutes, we'll have a compelling and awesome conclusion to BluSky TV today with Power Hour. Thanks, everybody. Stay profitable. We'll be back in 5. Television, TV. This is Coach Matt. We're in Coach Matt's technical lab time and going to do things a little bit different here today. We just got some news coming out on the market and we're navigating a pullback. So I'm going to do a little bit of power hour combined with the technical lab as we break down the technical analysis in the market after that pump show we saw by the bulls who really came strong here in the last 30 minutes or so. Now let's first talk about the news that is really kind of propelling the market here today. And I see Vodka, you kind of nailed the nail on the head there, my friend. Trump intervention 101 here in the market today. Earlier in the session, we heard a lot of information on whether or not we were going to bomb Iran to annihilation later on tonight. I believe the president was talking about escalation at levels no one has ever seen before. And then all of a sudden, about 30 minutes ago, the president gives an announcement, says, well, that strikes off. We're close to a deal. And I'm like, okay, market getting froggy here. And it kind of came out of nowhere. And that's what I really want to kind of talk about here initially in the lab is when you get a catalyst event, which propels price to do something that it had not been doing. For example, earlier in the session, and let's just go out to one time frame here. But earlier in the session, when I was looking at some of these longer duration charts, and I would highly recommend if you're not looking at longer duration charts, look at longer duration charts because earlier in the session, we had started to see on the 4-hour chart and on the 1-hour chart the first signs of what is called slowing momentum. And so when you come out to the daily chart here and you're looking at that pullback against the marketplace here, all of a sudden you start to see a reversal. And a pivot formation always starts with an intraday reversal. And to me, I know we live on intraday charts, but to me, if you're not understanding what's happening on the daily chart when you're dealing with a market pullback, I do believe you're doing it wrong a little bit because that's where the story needs to be understood. You might not be trading the daily charts like say a swing trader does, but you need to have the context for what's going on there because we are battling a major area of support right now. And you're starting to see the momentum shift at that major area of support. And yes, I am talking about the 9 EMA on the weekly chart, but right underneath that, you also have the 50 SMA on the daily chart that is acting as a form of support. So when you come out to the daily chart, the story for the bulls here is they're waiting on a pivot and they're waiting on confirmation. Jesse Livermore said it over 100 years ago. Confirmation is the insurance that you write on your projection. Well, if the bulls are looking to take advantage of this buy the dip opportunity as a swing trader, as a position trader, as an investor, as any other time frame outside of those intraday time frames, it's about understanding the pivot against the backdrop in the S&P 500 and the NASDAQ itself, because that's where the pullbacks are in the marketplace. You don't see that getting created on the daily chart. Once at some point, the daily chart is going to confirm, and we're going to get back into a bullish conversation. That confirmation right now on the daily chart is at 7,400. That's where that level is right now. So now when you're looking at a pivot formation, pivots occur. There's a dance that pivots go through. You get this big red candle driving price down. Okay. Spooks everybody. We had that candle yesterday. You come into a support technical catalyst. Okay. That's what we got here today. We're sitting at the 9 weekly. We're sitting at the 50 daily. Both of those are trend following moving averages that are very important in the backdrop of retracements. And we're sitting at those levels. All right. So we're at a catalyst. We had our big candle down, which is called the preceding candle. So this candle right here, this is known as the preceding candle. This candle that we're going through today is the slowing momentum candle. The slowing momentum is from the bears. Bears are losing momentum. Bulls are jumping back in. Now, the third candle in a pivot formation is called the confirmation candle. And technically, when you're talking about a pullback, Nothing is confirmed until we get above the previous day's high and we actually confirm that. And the reason I bring this up is because it's very important for me as a day trader to understand when that momentum is starting to shift so that I can start shifting a little bit as well. But you never see the beginnings of the pivot on the daily chart. That's because it gets created on intraday charts. And so when you kind of come down into the lower time frames, let's look at a 4-hour chart. Earlier in the session, and let's just kind of go earlier in the session here. Let me get off that. Let me get there. Let's just go right there. Early in the session, you had the starting formations of a cup and handle formation at the low point. You have a double bottom at support right here. You have lower levels of resistance, as you can see right here. That is slowing momentum. When you see a double bottom coupled that with slowing momentum in trend, as these big moves down, big move down, smaller move down, as the momentum shifts, you start to see the market through the lens of neutrality on the intraday side of the equation and not necessarily a bearish trend. Now, up until that catalyst, and let's come down into the hourly chart very quickly. You can see that cup, that handle very clearly. Up until the catalyst that we just got out of the president, you had a situation where the market was lowering its levels of resistance, and you had a very clean level of resistance right here at the 73.40 level. Right here on this candle is where you got that pump. And so as I was coming into my trading session here today, I made a statement earlier in the session to a bunch of traders. I made a statement that I have very little interest in navigating the intraday side of the equation right now. The market was kind of meandering here, not a lot of momentum, a lot of chop. It reminded me a lot of yesterday, quite frankly. And yesterday I thought honestly, I thought it was a bad day trading day yesterday. I thought it was chop everywhere. I thought it was a difficult trading session. When you look at the end result, you see a trend on the intraday side yesterday, but a lot of that was just at the close yesterday. There was a lot of chop yesterday in the market, hard to get an edge, and I kind of felt that way about the market here today. Catalyst events, whether you believe the president or not, is not the point of the conversation, because I was asked a question a couple weeks ago, Matt, is the president gaslighting the market? My answer was yes. And then I was asked a follow-up question, then at what point does the market stop caring about what the president says? And I said, never, never. At no point will the market not care what the president says. He's the president of the United States of America, the most powerful economic military country in the world today, if not ever. And the market has to care. The market has to price things in. And so we got a news item coming out earlier in the session right here, obviously, that the president called off the airstrikes for Iran later on today. And so later on tonight, there was supposed to be another wave for the third day in a row, another wave of airstrikes knocking out certain military and industrial infrastructure. They were also talking about taking Carg Island, which I never really believed, but at the end of the day, they were talking about it. Well, the president came out just barely and said, nope, we're not going to do that any longer. In fact, we are so close to a deal. You guys believe it if you want. That's not my point of the conversation. It's been said 40 times in the last 40 days. We'll see if this one sticks. But he did add something to it. He said, not only are we very close to a deal, the next step is the signing of the deal. And we're not going to invade Carg Island. We're not going to launch additional military strikes. We're going to continue to do the blockade, but we're not going to do anything else outside of that while we're on that negotiation path. And as oftentimes occurs when we see news like this, you see a catalyst event. A catalyst event is when news comes into the market and the market has to price that information in, and it has a sizable shift on how we see it from a technical perspective. Now, when you get caught off sides on a news dump like this, sometimes it can hurt, sometimes it can help, but it can certainly feel a little bit off when you get caught upside down on something along these lines. Now, for me, I didn't like the market today. I didn't have any action going into the from a day trading perspective. I didn't have any action going into the news here today. So, what I want to talk about from a technical lesson perspective. And for the most part, during Power Hour today, we're going to be watching the price action, talking about levels, very similar to what we do in Power Hour. But I do want to talk about a specific technical situation here. And it goes to the quality of breakouts, because breakouts are the number one momentum pattern in the marketplace. Breakouts, retracements are a loss of momentum. That's why they're more choppy. That's why they're more difficult. That's why it's more art on a pullback versus breakouts, which are more momentum based. We see more momentum on them. You break out, you go. Now, two things that I want to talk about here. One is, what do you need to see going into a breakout to make a trade? And two, if you miss the trade, what do you do next? Well, on the one hand, I will never take an overextended breakout. I will never chase a candle like this. And so when you see a candle like this, I personally see it as degenerate gambling in the market when you're just chasing momentum constantly in the market. I'm a pattern guy. That's not a pattern. It's momentum. Momentum's not a pattern. It's something that comes and goes. And so I don't love chasing a candle, a big candle, rocking 40 points, 50 points, 60 points going into a breakout. Oftentimes, what I want to see here is what is called a secondary pattern. And so there's two ways that I feel like you can approach this. Number one is there's a very important level right here in the market. This level at 73.40 is the handle within the cup and handle formation that just got busted up in the marketplace. This is a very important technical level here at 73.40. And so, first and foremost, if we retrace down to 73.40 and pivot, that's my Goldilocks. That's what I want to see. I want to see it break out, establish a clear higher level of resistance, and retrace and retest that breakout channel. Number two, you might not get that. And so if you'll see here, the first time we hit the 9 EMA, you guys know me, I love the 9 EMA here. The first time we hit that 9 EMA, you see that big candle. Remember what I was talking about on the daily chart, where you have a big red candle down, then you see a slowing momentum candle, and then you see an upward movement in price. That's called a pivot. They happen on 1 minute charts, daily charts, monthly charts. It doesn't matter your time frame. It goes through the same thing. Preceding candle, pivot, confirmation. Preceding candle, pivot, confirmation. Pivot is the crossover. It is the change of direction. Confirmation is the insurance you're right on that projection. And so there's two ways to approach a pullback here. Number one, you can just wait on that ultimate 73.40 level, or two, you can kind of work off this 5-minute 9 EMA. Now, I didn't do that here because I don't love the top side here. If I would have got 73.40, I would have done it. Getting in above 73.63, I just didn't pull the trigger there. I was waiting for something a little bit more down here. And then I started talking to you fine gentlemen and ladies. And now we're just kind of doing right here. I still like this 73.40 level, by the way. Now, so the two ways to approach it. Number one, if you're extended going into the breakout, my strong recommendation technically is do not chase overextended breakouts. Do not do it. If for every time it works, 3 other times it doesn't. A lot of times you're getting what you're seeing right now after a breakout when you're dealing with extension, because you only have so many buyers that are pushing that up. And then once you get overextended, you start to see that profit locked in and it comes back down. You see it on RSI here. RSI going into the breakout, literally right there, we're already above 70 after that second candle. You went from 40 to above 70 on 2 candles here on the 5-minute chart. That's extension. You're not going to see a massive amount of further extension after you've ran from 70 to 40, a 70-point move without any consolidation, without any secondary pattern. That's just a very, very, very sizable move without a secondary pattern going on. And so when you come out to the longer time frames, and let's go out to the 30-minute chart, you'll see it kind of just stuck in mud here at this point. These are your zones right there, 73.40 up to 7,400. You're currently at 73.70. You're right in the middle of that range right now. And so I'm just kind of being a little bit patient here because I did miss the trade on the pullback. So I'm just kind of being a little bit patient here. If we snap back to 73.40, this is my preference. I would love to get a support bounce at 73.40. That's my level that I have a lot of interest in. I don't have a ton of interest in the middle of a range when I missed the breakout. If I get my number, great. If I don't, I just missed that trade. I did like that trade on the 5-minute chart. Honestly, I just missed it. I was not ready to rock and roll because I was talking about some other things. But that's what I'm kind of waiting on, is this level right here. And that level is on the 15-minute chart. You can see it very, very, very clearly right there. And so that's what I'm waiting on. The second thing I think you can do here is, if you don't get that retracement, you can look at the next breakout here. Because I want to look to short yet, team. Number one, the government and the powers that be are trying to pump the market today. And I just wouldn't go against that until we see a violation, and then I would. And so if you are looking at a short, I much prefer the short off of a reversal at 7,400 or a breaking of this 73.40 level. Here, you're going against trend, you're going against momentum, you're going against the government, you're going against Wall Street, you're going against institutions, you're going against the big dogs, you're going against the whales, you're going against the fish, you're going against everybody right now. You're on an island and you're saying, me against the world. Well, I don't like it. I don't like that. Where I like it is back under 73.40. This breakdown back to the lows would most likely send it back down. A reversal up here at 7,400, I would have interest in. And so these two levels is where I'm really kind of looking. And I don't even like this breakout right here, because there's only 10, 15 points until you get into that upper range. And so I was hoping we'd get this pullback to reset that 73.40 level. We didn't. We kind of got it into the 73.50, and then it got back up to 73.60. And now you're kind of dancing that overhead here. But the lesson, once again, that I want to talk about is just, again, seeing the market is overextended here and being a little bit patient on that secondary pattern. And you can look at that overextension in a variety of different ways. Number one, is RSI above 70 as you're going into the breakout or the first candle after the breakout? You're officially overextended in that condition. Number two, you can look at it just from a visual perspective. Obviously, this is a sizable candle here. It was a massive pump in the NASDAQ, massive pump in the ES. It might take a little bit of time for this to get dialed in, quite frankly. That was a real big time move. But do you see how far you are away from your moving averages here, team? Go back in time. The market does not love to move that far from the 9 EMA. It just doesn't. Look at the 9 EMA hug price on the upside. Look at it hug price on the downside. Look at it hug price on the top side. Like, you look at this situation, the market doesn't like that level of extension. Look at the extension here. Look at the extension here. Now look at the extension here. The market does not, if you're chasing that bull trade on that breakout, when you are that far extended from the 9 EMA, you're asking to lose money. You really are. You are asking to get chopped up and destroyed by the people that are going to be a little bit more patient in their pattern development than other traders are. And so I just personally, whether I'm talking about a swing trade on the daily chart or whether I'm talking about a day trade on the intraday side of the equation, I am the exact same way. I will not take an overextended breakout. I will ask for a secondary setup following it. And if I get it, I'll hit it. If I don't, no harm, no foul. And so now as we look at the market kind of with some fresh eyes here, team, looking at a little bit of consolidation, I do have an opinion at the 73.40 level. And as of right now, that's kind of where you see this kind of battling the 9 EMA. It doesn't have momentum right now, by the way. Battling the 9 EMA, battling a little bit of top side, don't have a strong opinion. I'm going to wait until we get that bounce at 73.40. And if we get the bounce, I like the bull. If we get the break, I like the bear. This is a very important level for both bulls and bears. Some levels in the market, that's a bullish level. Some levels in the market, I see it through a bearish perspective. This 73.40 is where you would want to see patterns. Do we get a low base breakdown? Do we get a bounce back up to the top side? That level is an action level for bulls and bears. And so keep an eye on that level. And then the second level on the ES is right up here around that 7,400 level. And you can clearly see that with that pivot right here, extended over here. That is a massive, massive overhead as well. And so I think we're going through a little bit of a battle zone. The market priced in for about 15 minutes, that news headline. And that's about what news headlines get these days, guys. Even on a headline where the president of the United States comes out and says, we are close to signing a deal and we will announce the date of that deal in the future. You had a less than 1% move that lasted for less than 15 minutes in the market before the market said, nope, we're done. We're going to now talk about the technical conversation. A month ago, that would have been a 2-day rally. 2-day rally. Today, it's a 15-minute pump. That's what happens when you get a little bit of the boy who cried wolf, and we've heard it now 39 times out of 39 days. And so market wants to see this get dialed in. I want to see this get dialed in as well. Now, if you ever, I said this the other day, but if you ever want to understand the truth of the condition of what is truly transpiring in the Middle East, when you are at 90 on crude oil, no changes. When you're close to 80, that is obviously de-escalation. When you're above closer to 100, that is escalation. Right here, guys, and this is crazy to me on that type of headline that came out of the market, which obviously there was a little bit of market pumping and market gaslighting, and I'm assuming there was some insider trading going on that headline as well. But when you're looking at crude oil, very similar situation. Broke down, went to the next level of support, not on the 5-minute chart, but when you come out a little bit of time, you can see it come down into this area of support right there. And so the only thing that has really transpired so far today, guys, is crude oil broke an intraday level of support, came back down to the next intraday level of support. ES broke an intraday level of resistance, went up to the next level of intraday resistance. But what neither of them have done, despite the news so far, is actually trend outside of anything other than a 2, 3, 5, 10, 15-minute time frame. When even you go out to the hourly time frame right here, and let's come back on the ES very quickly, but you're now straight up neutral. Now, what is the level that gets us in a bullish situation? Okay. It's not 73.40, by the way. That's neutral. When you come out to the daily charts, as of right this very second, remember, a lot before the bulls get a real big bullish trend on the intraday side, you got to confirm on the daily chart for that to actually occur. As of right this very second, that level is 7,400. It's right at the zone of the previous day's high. And you see this on the intraday side of the equation right here. You see that little pivot right there. You see the pivot right there. That is 7,400 on the ES. If this daily chart closes above 7,400, you have confirmation on the bullish retracement. Now, when you talk about that from a NASDAQ perspective, as I know many of you trade the NASDAQ is I thought it was a little bit more choppy today. It is getting cleaned up. You see this level right here at the 29,000 level. That was a pretty important level that got breached earlier today on that power move out of the headline that came out. We haven't seen any continuation analysis since that time period, and you're still dealing with a little bit of that downtrend, but it's very similar to the ES. Coming out to the daily chart, just to look at kind of the overall backdrop of confirmation, you're already fighting for confirmation on the NASDAQ, but you still got some room to do before the 9 EMA test. So I would say we're not out of the woods yet on that candle either. Looking at the NASDAQ, a little bit of hesitation here. Coming out to the MES. Very similar pattern here. Let's get on that 5-minute time frame. And we're going to watch this play out here for a minute, team. We might watch this play out for the next hour and a half, honestly. Once again, I have an opinion at 73.40. I have a strong opinion at 7,400. Those are my two levels, and that's what I'm going to be patient and I'm going to wait on. I am not going to overtrade today. I think that's a big mistake right now against the market right now. If I get my pattern, I'm going to get my pattern. This week on A setups, guys, I'm hitting over 90% on A setups this week. On BC type setups, I'm hitting less than 40% right now this week. So and that just tells me that if I'm patient and I wait on my pattern, I wait on my level, and I'm not over trading, I've had a very, very good week this week doing that. When I feel like I'm chasing and I'm lowering my time frames to catch momentum, or because I see other people doing it, my batting average is not very good this week. So I'm going to be patient here. That's what my week tells me. I'm going to be patient here. I'm going to wait on my level at 73.40 or 7,400, and I don't have a big opinion inside that range as of right this very second. I do want to spot check gold here as gold. I'll show you this on the daily chart. All right, so gold is getting some fairly deep extension here, team. In fact, this is the deeper we have been on gold from an extension perspective in years. Got to go all the way back to here. So you got to go all the way back to 2023 before we have been this far overextended to the downside on gold. Now, what is impacting gold is a lot of the higher for longer language in the market. If you don't understand what that means, we can talk about it during power hour. But as of right now, I just want to kind of spotlight that. So gold down, 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 down. What did we start to see? Slowing momentum, upward movement in price, get above the 9 EMA, create a bullish uptrend. All right, let's take a look at where we're at in the saga here. Overextended to the downside. RSI is trying to pop back up above 30, which is alleviating the overextension conversation. Now, on the intraday side of the equation here, team, like gold for the first time in a while started outproducing, in my estimation, the ES. And that's why I'm bringing it up today, is because for about a month straight, I have complained about gold getting outperformed by the ES for about a month straight. We're seeing it shift a little bit here. Now, maybe it's because we're deeply overextended and we're getting a little bit of a value bid coming out of gold bugs. That's certainly part of it. I know my gold bugs. That is certainly part of it. They've never seen a downward pressure in price. They didn't want to buy something with gold. So there is some of that going on right now, but some of it is also just seeing the market overextended to the downside. And when you look at the dollar right now, team, the dollar is in a multiple time frame resistance challenge. If the dollar starts to show weakness, we could see some pump candles on gold over the next few trading sessions. And so, whereas I kind of feel the ES and the NQ are kind of trading in tandem right now, both of them just had a catalyst event, I actually feel gold analysis is cleaner here. And the reason is we're at levels that we haven't seen in a while. And now you're at levels you haven't seen in a while. You also don't have a billion points of chop to the left. You don't have a billion points of chop to the right. And so you can easily just look at this 4190 level and say, all right, we break out of 4190. Let's start a nice little bullish uptrend. That would be the continuation of the initial uptrend. Whereas if we see a fade type situation, you can very easily look at the 4152 level right underneath the wick and say, if that's going to get faded, well, let's fade it down to 4100. And so I actually do prefer a little bit for the first time in a while here, team. I actually prefer gold analysis a little bit on the intraday side versus the ES, just simply because, again, when you're talking about the ES guys, you're in some zone of a lot of different data points. That's why we're dealing with a lot of battles right now. There's not a lot of battles in gold. Gold's been getting its teeth kicked in for 2 straight weeks. We're at a low point, which means and in that low point, guys, when you come out to the daily chart on gold, you look at these big sizable candles pushing down, down, down. Well, what do you think that means if it starts going back up, up, up? It doesn't have a lot of overhead resistance levels to stop it. The same way that once you breached this support level, there was not a lot of intraday support levels to stop the sell off, the same way as the market tries to retest that bearish retracement. And so just keep an eye on gold. We're seeing a little bit of relative outperformance here. Just from a technical perspective, I feel that is the positive shift for gold. And I kind of like the continuation bullish analysis, but I also like the short here too. So if you are shorting, that level is the 4152 level. If you're looking to long, I got this as a cup and handle formation as of right now, and I'd like to see that 4190 level get breached there. And so for the last part of the lab here, team, if you have any questions for me on anything you're looking at, you got a trade idea you want me to take a technical look at, you got a swing trade, day trade idea you want me to break down, I am here for you for that. But for the rest of the time for us, we're going to be watching these two situations play out. On the left-hand side, we're going to be tracking gold. On the right-hand side, we're going to be tracking the ES. And what I'm looking for is for gold to get up to this level. And I do like the ES. I do like gold on a breakout more than I do on the ES. Or two, if we start coming back down to this level here. Like I said, this is the first day gold has started to at least perform with, if not outperform ES. You can see it very clearly on the chart here, team. Look at the left of the chart, a little bit different. Look to the left of the chart, a little bit different. After the catalyst event that got the bulls united, it's the same thing. Because and that's a telltale sign, guys, when the bulls are united, gold and S&P look far more closely aligned with one another. And so we're closer to that pivot formation in the market today than we have been in a while now, at least for the last 3 to 4 days. But again, I'm going to be a little bit quiet here as we watch this play out. And if you guys have any stock or swing trades or any other questions, you want my take on the PPI report, Oracle's earnings, or anything on the geopolitical side, pipe into the chat. Otherwise, let's look at some price action here. They legitimately are running on the same gasoline here. Very rare recently. Like they have not. Gold really kind of diverged from what the general markets were doing. It was actually very concerning. It's a positive thing to see them get reconnected. All right, seeing a little shift here, guys. 9 EMA getting tested here. This is where it does get interesting. You get underneath the 9, you probably come down to this pivot here, and we could easily retest this. Not a lot of action here so far, guys. Closes underneath this once again. You most likely see that level at 47 get tested. That therefore comes down to 38, and that's in that 40 to 38 zone of that support level. This line is a very important line. Everything else here is all minor stuff. This level right here, this is major. This is the pattern level. That is the pattern level on the breakout of the cup and handle. That one's important. These other ones, much less so. You see how we're test. Now this kind of rolls over here. See if we can get that test down there. You look at this. Even on this 5-minute candle, gold, up, doji. Light relative performance there. I know I'm geeking out on it, but like that's the first time I've seen it in literally a month. Little cup and handle action on gold here, team. I honestly think you can go right now. I'm waiting on the 90 handle. I want to see it close here. After yesterday, I need to see confirmation today. Ooh, gold looks like it wants to get testy here, team. Definitely a higher quality pattern on gold than on this is more of a symmetrical triangle as of right now on the ES. Trying to break through that symmetrical triangle. See that kind of up, and then you have pushing up. Yeah, it's trying to break through that. Whereas you got more of a horizontal test here on gold. On symmetrical triangles, by the way, you wait for the confirmation close above the triangle, then you play the bar on the confirmation close, meaning order above the high of the confirmation close, stop underneath the low. It's known as a volatility-based pattern, although I'm not seeing a lot of volatility in that one right now. But it is a clean look on a symmetrical triangle. Like the way you could structure this one, like here, I'll just kind of show you in this this version here. Let's go to 5 contracts though. So you could like put the order in right above the high. So let's get that right above the high. Let's buy with stop. So right there above the high of the candle. Then once that triggers, you just put it stop loss right underneath the base of the candle. And the hope is you also get this 9 EMA to converge there. And then, as I often like to do in a pattern like this, you would trade that. Whereas on gold here, you would like to get the order in typically on a multiple time frame resistance challenge like this on gold. I want to see a confirmation close and then I'll play the bar. But I don't love when I don't love triggering when the candle's this far away from the 9. Like, give me another bar of consolidation here and I'll like it a lot more. See that thing just dancing, seeing if it wants it, seeing if it wants it. All right, now you're in. So this is like one of those what I refer to as cheap risk, where you can legitimately just play this bar here. Now, technically speaking, the secondary target is the pivot of confirmation on the daily chart at 7,400. That's where you're targeting to, is that 7,400. I don't really have a second target above 7,400. I'll make the decision once it gets up there. By the way, I think you do the same thing on gold, just to kind of show you how it's done. But I like, again, you see how we're pretty tight against the 9 EMA here. I don't love chasing that. It's just something that I don't love doing. The market doesn't love to live above the 90 EMA unless it gets pure momentum. And so I'll wait on a more of a confirmation close and then a snapback. But on something like this, you legitimately could just get the order in above the high, put the stop underneath the bar, because the bar, the low of the bar and the high of the bar is above and below that confirmation candle. And so you could legitimately just play this bar right here. That's a good trade right there as well. Is a good trade there as well. So let's watch the ES play out. I'm going to be a little bit patient, wait on a consolidation base or a little tiny flag to reassess that 9 EMA on the ES here. Excuse me, on gold. But that is how you play a symmetrical triangle in the ES. If you've never traded a symmetrical triangle, that's how you do it. By the way, more conservative stop losses would be put down here. So stop loss placement first is right underneath the bar. That's the cheapest you can get, is just play the bar. Stop loss number 2 is underneath the 9 EMA. Stop loss 3 is underneath the pattern, and the pattern is underneath that pivot point. On symmetrical triangles, their volatility, they need to go up, or you don't want to see them hesitate. Like symmetrical triangles, you want to see destruction. So I usually just play the bar there, and then I'll be patient waiting for that 9 EMA to catch up so I can start locking in a little bit of that risk. All things being relatively equal, I'd like to get 2-3 bars of expansion here, and that makes life easy. 1 to 2 bars of expansion on a breakout makes things every time it makes it difficult. You get 3, 4, 5 bars of expansion on a breakout, like life's easy. You can literally scale out at T1. You can trail stop loss, kick your feet up. It's like walking on a beach on a sunny day down in the Caribbean. 1, 2 bars of expansion, all of a sudden you're puckering up and you're saying, all right, don't stop me out. This really does set the trade, by the way. All right, team. While this plays out, we're going to take a break from BluSky TV for the next 5 minutes or so. We'll be back with Coach Justin for Power Hour and myself here in just a minute. Hopefully, you guys are having a wonderful day. I'll be right back, and stay profitable.
hour. You know, we already missed the Trump tweet or the Trump Truth Social post. So let's see if we can squeeze something out of this market. I mean, I think
I'm trying to squeeze the juice here, brother.
yeah,
I'm like
I think the only thing we do is,
squeezing it.
I think the only thing we do is try to find a long. I believe you're already long from your time earlier, right?
I'm still long from the ES trade I took out of the symmetrical triangle. Yeah,
Okay.
and it's just in progress. I'm targeting 7,400 as and I'll probably scale out here at around the 73.88 level. As we get into a little bit of that wick high up there, just because yesterday I kind of regretted not scaling out during power hour. So I'm going to fix that flaw today, Justin. If I would have scaled out, it would have broke even yesterday, and I didn't. So I had to take the L. So I am looking to scale out as we get into the 88 level again, but I am targeting 7,400. And I got an order in to go above gold as well on the current candle as well. So doing a little bit of partial on the ES, doing a little bit of partial on gold, and that's how because they're kind of rocking together. I didn't want to go full position on both because I felt like I'd be over leveraging myself there. So I did a partial on the ES, and I just added a partial on gold, just barely. So I'm rocking both of them right now.
Love it. These ES levels were the same. I think Becky took this exact trade yesterday, ran it to 7,400. So seems good to me. I'm currently not in anything. I was actually in a meeting with a lot of the BluSky team, and we were talking. I don't remember what we were talking about, but all of a sudden, all of us just stopped talking and go, "What the?" and then it pumped again. We went, "What the?" and then we saw the news and. You know what? I don't even think the news was like worthy of a 500-point pump, in my opinion. That's
it's the same headlines we've been getting for a month and a half. Like
it's and
war's over, guys. We're close to a ceasefire. Wait, we're in a ceasefire. We're close to a negotiation. Wait, are we close to a deal?
Yeah,
it's like every time we do this, it's like a drug addict that has to pump a little bit harder. You know what I mean? It's like today is like we are ready to sign documents. It's like. We know you guys haven't written out a damn thing.
Well, then also, I don't know if you saw literally 15 minutes later, it comes out, traders no longer fully price in Fed rate hike this year. So we get some Trump news, some Iran news, and then no rate hike news. So it's like whatever they can do to prop the market up, they're doing it right now.
Yeah, have fun with that one, Mr. Market. There's still a massive debate. Like saying no rate hike this year is legitimately crazy. Nobody knows what the inflationary conversation is in a month from now. It could be far worse than what we have right now. Could be far better. We don't know. And if you don't know what the inflationary rate is going into the meetings next time, you think the Fed knows what they're going to do? If the Fed doesn't know what they're going to do, and I promise you the dude on Twitter that says they know, they don't know. But you're right. You are getting a lot of the perma bull pump here today. Yeah.
Well, let's also talk about this headline. Traders no longer fully priced in rate hike. What the hell does that mean? Who's the traders? I didn't get interviewed. Did you get interviewed?
I nobody called me up, Justin.
I didn't do a poll. I don't know. Anybody in the chat? Did you get a call? Because nobody I know took place in this. So how is that a red folder news event on Financial Juice?
That is a red folder on Financial Juice.
That is a red folder on Financial Juice. So it is the same importance as us not bombing Iran, according to the red folder.
That doesn't make a lick of sense.
That makes zero. That makes absolutely zero sense. It actually pisses me off.
Lick of sense. I'm looking at the path of policy right now. And from where we were yesterday to where we are today, you're right. We have had some slight alleviation on the rate hike side by the end of this year due to the PPI miss today, but it's still 16%. And now you have 43% expected rate cut. So I do get the headline because the headline is basically suggesting that the Fed fund rate by the end of this year is now a little bit more towards the rate cut versus the rate hike. Now, the vast majority is nothing. The vast majority is just pause. Like,
Exactly.
the Fed's going to pause. But there is like a debate on the hike versus the cut. And earlier this week, there was a probability on the hike side. Right now, that probability has shifted to the cut side. But no. Justin,
I don't know. The timing suspect.
The next move out of the Fed's a hike. That headline's ridiculous. Like,
it is ridiculous. That's what I'm saying.
Like, I'm trying to understand the headline. Like, what are they reading? And so I'm trying to see it through their perspective. And the more I look at the path, I'm like, that's nonsense. Like, utter nonsense.
Yep, absolutely. It's incredibly dumb. Oh, do I want to go long on this pullback? Let's see.
If you think you're going to get 7,400 at all, I would just limit order right now. I don't think you're going to get cheaper risk than this. I mean, slap a stop underneath the low of the candle and call it good.
Yep, I'm going to take it on the Qs. Minute 257. I would love to go to 300, 320. We'll see. 250 was my target on the Qs. If we wanted to, I'm already up $100. Nice. Was my target on the Qs if we wanted to rip, and it took some news, but it did it. You know what's funny? I was actually short about 5 minutes before that news came out, and I closed out.
Oh,
and
bro.
I am so happy. Oh, my God.
Bro, that's well done.
All right, guys, there's an absolute heater. Let's go.
By the way, your trade on the Qs, I got on the break of the triangle. You got on the pullback to the triangle.
I'm out for 250 on that one, guys.
By the way, you and I got in about the exact same price point.
I figured you got in because it's a level of support. Yeah, hits a trend line, all that kind of stuff. Yep. All right. Well, that was nice. I wasn't really expecting to get in anything. So
why not show up for 10 minutes to be in a trade for 2 seconds to get a couple $100 there?
Oh my God, Matt! My average trade time this morning. Did you look at the chart this morning?
I didn't really do anything on the day trading side till post after I do my early session. So it was right around 9:30 my time.
Well, it was one of those sessions just like yesterday where the 1 minute candles were 50 to 120 points. Up, down, no real continuation, and the pullback swept every level. So my average trade time was 20 seconds. I think it took 6 trades. I was in the market for a total of about a minute and a half, but I was trading for 2 hours.
Really?
Yeah, it was nuts. I was like, guys, I'm just going to tell you the levels, and as soon as if you see a quick $250, just take it. We're out. Because there was no hold. I did this yesterday, and I would be up 80 points, and then I'd get stopped out red. And I was not doing that again today.
Honestly, that was a little bit me yesterday. Honestly,
yep.
Over and over again. Edge, and all of a sudden, 5 minutes later, I'm getting smacked in the mouth.
Yep. It was sweeping both sides, and then the move happens, and yeah, it's rough out here. People trading full position size, especially in the New York Open. You guys are different. Oh, there's 300. This is a great play. I should have held.
Don't close it. I'm not closing yet.
Yeah, well, you hold for me. There, that was my full target on the Qs that just.
All right, fine. I'll scale out.
Oh, the ES isn't moving as. Oh no, ES pulled back too.
No, I mean ES doing a little bit of the same, but I'm still kind of looking at it. I haven't done anything. I haven't scaled out yet, by the way.
I have 383 marked from something. So it would be the top of the triangle, I guess.
How did you know the president was going to intervene today? I don't know. It's another day that ends in Y.
Yeah, literally, right? I actually faded that candle as soon as it came out for about a 15-second play and took 50 points.
Did you really?
Yeah, I thought for sure this wasn't going to hold, but it's actually holding.
I think it's the market telling us we don't know yet. Like
pretty much. I feel bad for Breezy trading tonight. It's going to be interesting.
I kind of like gold right now. Like gold is actually the trade I made on
Ooh.
gold is doing far better than the trade I made.
Yeah,
on
much
ES.
better breakout.
Yeah.
Wow.
I'm up 5 right now on gold. So
Let's
I'm gonna let this
go.
one play out though. But it's at my 4,200 level. Jesse, I'll let you make my decision. Am I going to scale out here on gold? Should I scale out?
How many do you have?
5 micros.
Take 2 off, maybe.
I agree.
It's still early in power hour. Damn, it's only 10 minutes and we both already scaled out and taken profit.
I honestly, I think that's the environment we're dealing with, though.
Mm-hmm.
You know,
it is. It is.
Oh,
you can
gold!
go.
I scaled down. Oh, oh,
oh, my bad, man. My bad. It's okay. It's okay. It'll probably come right back down.
No, I left 3. I left 3 runners.
Okay,
I left 3 runners. I scaled 2. I left 3 runners. I still have full position on the ES, by the way. I'm double dipping here. I got ES on one and GC on the other one. I'm double dipping, so I'm still fine. So I got 5 on the ES and I got 3 on GC right now is what I have.
Oh man, the Qs are just pumping. Wow.
By the way, I did troll up my stop loss on the ES to the break-even cost.
Oh, you hit TP1, right?
Yeah.
Beautiful.
So now I'm risk-free here, guys. I can kick my feet up the rest of the day.
Yeah, no kidding. No kidding. Hold us all the way into close, hopefully. You know, it's funny when we saw this Trump candle.
We're having a fun day if this holds in the close, brother.
Yep. We saw the Trump news. We were joking about it. We're like, and we're still gonna bomb Iran tonight. Just watch.
Dude, it would not be out of this.
How many times have we seen this song and dance? You know,
I would not be surprised if we still bomb Iran tonight.
Well, if you are long in anything, should be smooth sailing. Probably slight pullback. And then
I'm going to scale out of the ES as well. Just kind of lock some of this in.
There you go.
So I officially did scale on both the ES and the NQ.
Beautiful. Risk-free. Made some money.
Yeah.
For the Qs, guys, I want to see if I want to get into another trade, a pullback to around 310 and hold. And then just keep going.
Back. I'd limit order a snapback here. But I wouldn't chase any breakout here. I wouldn't chase the price.
You know what's interesting? I'm looking at the price. The Qs are almost up 3%, and the ES is only up 1.5. That's a little surprising.
Well, the Qs had some upgrades today.
Oh, did they?
Yeah, Oracle had earnings. They were lukewarm, boring, to be honest with you. But who got upgraded? Lam Research got upgraded. Intel got upgraded. Applied Materials got upgraded. So you had Bank of America upgrade. I believe it was Intel based on their foundry business. You had, I want to say, Barclays upgrade price targets on both Lam Research and by the way, check out Lam Research, LRCX. It's one of my favorite companies in the market, by the way. LRCX. Yeah.
Oh wow, yeah, they're up nice today.
One of my favorite companies in the market is Lam Research. Wonderful semiconductor equipment company. There's only 3 you can pick from: ASML, Lam Research, or Applied Materials. Barclays upgraded both Lam Research and Applied Material. So
I used to trade AMAT options all the time.
Oh, AMAT, you can do whatever you want on. Same with Lam Research.
Yeah, really.
Like you can do whatever you want on it.
Yeah, wow, nice, definitely nice upgrades. Okay,
so
looks like Tesla's.
Oh, go ahead.
Looks like Tesla's pumping, probably purely off just being related to SpaceX tomorrow.
Little hand holding with SpaceX tomorrow.
Yeah, I'm assuming.
By the way, have fun in that stream tomorrow, brother.
Oh my god, I know it's gonna be brutal.
It's gonna be intense.
First day in the NAS, like, oh my god.
It's like it won't be in the NASDAQ, but it is going to have massive influence on the NASDAQ tomorrow. Yeah. It will be in the NASDAQ in 15 days, by the way.
Oh, it's 15, okay.
Yeah, the NASDAQ modified their rules to
I saw that, yeah.
by SpaceX.
Yeah, they it's what, only the waiting period to sell is shorter. A lot of different rules. Yeah.
Yeah.
Oh man, we are pumping.
Oh yeah, dude. Oh yeah, dude.
Oh yeah.
We got some burners here.
Yeah, no pullback at all on this one.
We'd be making Mike proud right now, brother.
Yeah, right.
I'll tell you what, I like both trades, but I love the gold trade. Like I really do love.
Yeah, the gold trade looks great. That's such a clean breakout, consolidate breakout.
Yeah.
It doesn't get much better than that.
I was actually hunting it earlier in the session, but then the pump candle ruined everything for me.
Right.
Like it just did.
Yeah.
But then it reassessed pretty good. Ascending triangle breakout looks pretty good. Oh, you caught the knife on IAU? I was asked a question earlier today. Would you start building a position in gold assets based on the sell-off recently? And I said, absolutely. It wouldn't stop me from building a position. Would I add to a position that I'm already managing? No, but would I start building a position based on my philosophy of having a core holding in gold? Absolutely. IAU is the cheaper ETF of the GLD. So it's, yeah, it's one of those.
Do you actively hold those, or do you just like swing trade them?
Oh no, those are long-term holdings.
Okay.
Yeah. I don't really swing trade gold. Like I'll swing trade a gold stock if it's set up, but I don't swing trade gold.
Okay.
I'll day trade gold and I invest in cash flow gold assets.
Okay. Yeah. Oh wait, there's more news. Breaking.
Yeah,
given that the U.S. has accepted the text proposed by Iran, the likelihood of this text being approved by Iran is high. Okay.
Yeah. Okay. Who said that? Was that an administration official?
Fairs News.
Oh. Trump was talking about a deal that was going to be signed, and the only thing they had discussed is getting that done.
Mm-hmm. And then I guess he's speaking with Netanyahu as series of talks with regional leaders. I just expect a bunch of news drops. I'm putting an order way down at 315 on the Q. Let's put it 320 on the Qs just to see if I get lucky. That would be similar to like a 383 on the ES. VZLA. Silver Corp? Is that what you're looking at?
Say again?
VZLA. Have you heard of that?
No. Let me look at them.
Some Silver Corporation.
No. It's a no for me.
Man, this market's just gonna run. Look at this.
Listen, let it run all day long.
Oh, gold! Wow, gold's almost at 220 now. Jeez.
Oh, dude, we're just having fun trying to stop right now.
Yeah, right.
Yeah.
That is so funny because I fully thought, at least when I was looking at the Qs, we were going to break lows, we were going to break daily structure, and then you know what? Trump said not today. If we're going to run a daily resistance, we got a lot of room to go. But yeah, tomorrow SpaceX is going to be the only thing everybody's talking about.
Yeah, rightly so too. It's a big one.
I'm just curious how fast it's going to go up, and then what it's going to come back down to.
I think that's the most likely scenario. Up big first. How big of a pullback is it? Because it could be bigger than the upward movement in price.
Yeah, is it gonna close above where it opened? That's what I really want to see. Well, I mean, we got funds buying in it, so
retail funds, like, wait till it gets in the NASDAQ and you get $30 billion a bid.
Exactly.
Like, it's going to be a volatile thing. Hey, I do got a question on this gold trade for you. So we got 40 minutes left in the session. It's my opinion that if you're going to catch the next move, you're going to have to set through it either a slight consolidation or a pullback.
Yep.
Would you lock it in right now and just say reassess if it anything, or would you set through the pullback?
Today specifically, I've been locking everything in. So I would say lock it in just because I don't trust the news. I don't trust this price action.
I agree.
That's been the theme of the week for me is lock it in.
Yeah.
And I've left a lot on the table, but
I'm leaving one runner.
There you go. That's good.
Like, just on both the ES and the NQ, I left one runner on each.
Yeah, my man Bach has seen me all morning. The times I hold, I regret it. And the times I sell, I leave a lot of money on the table, but I also lock in a ton of gains. So it doesn't matter. And yeah, I'll be a paper hand in this environment. It's fine.
I think the last 4 days be paper hands in this environment. Like
100%.
Go ask the crypto nerds if diamond hands is working out for them right now.
Exactly.
So I'll accept the paper hands right now in this environment, but I will tell you, if we would have had more time in the day, I would have sat through a pull.
Yeah, absolutely. I mean,
I would not have on the ES, but I would have on gold.
Yeah, I like that. Yeah. I just wouldn't, when we're getting moves this big, like, you're not going to catch the whole move. You're going to paper hand if you're going to, but you can still make a ton of money.
Well, that was a great point, Justin, because you don't need to hold long term in a volatile environment. You're getting twice as much movement in the same time frame right now.
Yeah, I mean, the ES made 50-point moves about 10 times today. So you catch any of those, one of those, like, you're good for the day, for the week. You know. Yeah. And now if you're trading the Qs like I was, let's see, 679, 300-point move, 200-point move,
it's a big point trade right now.
300-point move, 300, 200, 800. Like, you catch any piece of that and you are good to go.
Mm-hmm.
And I think the people holding for directional moves in this environment, like, you're getting lucky if it ends up going your way.
Yeah. You know, Vodka, the reality is, like, there's been a lot of times where I come in after, like, because I don't trade the morning session. I live on the West Coast. It's too early my time. I'm a night owl. I like gold on the overnight. But there are many, many, many times I come in to kind of after I get done with all my other stuff and I sit down to do my day trading, where I'm like, really, you couldn't have just wake up that one time for that pump candle this morning? Seriously?
Right.
So I understand you. I understand your comment is all I'm saying, because believe me, I wake up in the morning, I'm like, maybe I should trade the morning session a little bit more. I like the night. It really is all I can say.
You know what's funny is I typically sit there during the night session when my wife works nights at the hospital.
Yeah.
So I'll sit here, and then sometimes, like last night, I was watching the basketball game, and I'm like, the night that game was freaking crazy. Like, one of the best games I've ever seen. Wow. Yeah, I was screaming on my couch.
Fun to watch.
Yeah.
I became a massive Knicks fan in the fourth quarter. I was like, oh my God, I cheered on the Knicks like it was the Jazz. Like, I
typically hate the Knicks, but I'm like, do it, you can do it.
Like, and then when that tip at the end with 1 second left,
it was just insane,
crazy.
I almost turned it off at halftime too. Game though. I almost turned it off because it was a blowout, but I'm glad I did.
I did at halftime. Like, I was like watching the Spurs couldn't miss in the first half, and I'm like, I'm gonna go do some other things, right? Yep. And so I came back and I would spot check the score, and then I'd fast forward a little bit, and it's like, all right, now it's 25, now it's 22. And when they cut it down to like 16, I'm like, and this is like in the fourth quarter, it was like, like 16 or 17. I can't remember, but I was like, all right, let's check it out. And then little by little, like just, it was fantastic.
It's funny. My buddy texted me and goes, if they get within 15 by the fourth quarter, they can do it. And they literally hit like a last second shot to get it to 15 by the fourth quarter. And they did. But my point is, I was watching the game and the market was moving like crazy last night. I'm like, why the one time I'm not watching it, it decides to pump 600 points overnight? So I know the feeling.
Dude, we all know that feeling very well, actually.
Somebody said I'm a Knicks fan, but my 8-year-old son is a Spurs fan. I had to match my emotion. I wouldn't have been able to do it. I would have gone to a different room, man.
I'll tell you right now, I would have been telling my 8-year-old son exactly what's up.
Yeah, exactly.
I'm going to teach you some valuable lessons here, young man. Now, if it was my 8-year-old little girl, I would have set her down and talked to her about the positive things in life. But my little dude knows better than cheer against the old man's team.
Here comes your 400 on ES, and
I'm thinking about closing the last one here.
Yeah, and then my full target, if you're in the queue still, we're hitting some massive daily levels at 440. So if you want to go for this extra little,
I don't know.
This is the part in the trade where if I'm in, I'm like, is this extra 15 points worth the risk of it pulling back 30? And it's usually not.
It's kind of the same thing on gold I asked you 10 minutes ago, and gold hasn't budged its price. We got 30 minutes left in the session. A lot of things can happen here. The bull's got an edge here, but you're coming into some very important resistance levels that are not nearly as easy to break out of. And so you're slightly extended going into it. I think you're going to have to wait on some consolidation. And these were both really good trades.
Yeah.
All right, just let the stop do the work. Maybe.
I'm actually going to put a hero short at daily resistance on the Qs and just see if I got lucky.
We'll hit the reverse here.
Yeah, up around 450 on the Qs. On the ES, it would be like 411 or so. Definitely, it's, I'm going to call it like a lotto, but I want to see if it's going to respect anything, or if this pump is just going to keep pumping.
I'll tell you what I did. I am, as of right now, trailing both stop losses on gold and the ES underneath candle lows. I'm above the 90 MA on both of them, and whenever I do that, I'm giving this no room at all. Every candle that closes, I'm throwing that stop loss up underneath the low.
Because this run is suspect. There's been no pullbacks. It's just full gas.
Glad we got it though, bro.
Oh, absolutely. And there's 400 on the dot. Nice.
Yeah, you're at the 400.
Oh, missed my fill by like a tick on that one. That's a bummer. Oh man, did exactly what I wanted to. How close was I, guys?
All right, I closed the ES at the 400.
There you go. Killer trade.
Thank you. Nailed target.
Love it.
I did scale out along the way, but we talked about when I made the trade. Like that's kind of what I was planning on doing, and I'm still in the runner on gold though. Like I'm canceling that short, by the way, guys. We missed it by a point. It's probably gonna blow through it now. Yep, and I'm glad I did. Wow. Holy
yeah, this is yeah. I agree, Matt.
Listen, let the bulls take it where they want.
I'm
just gonna keep that runner on gold.
S&P upgrades NVIDIA to AA. Outlook stable.
Why would you have to do that? Why weren't they already at AA stable?
Right. Oh, we also got U.S.-Iran MOU likely to be signed next week by CBS. Reported that.
CBS did?
Yeah. So that's pretty legit.
Well, no, I agree. That is legit.
I've heard it before, though.
Yeah. Well, I'm trying to think about what's in the memorandum of understanding. Are they opening up these trades? Are they getting frozen assets released? Is there ongoing nuclear talks?
That's the big one. That's the big
if the
one.
memorandum of understanding is, hey, we agree to talk down the road like the last one was, you saw how that one ended. So I think it's certainly a step in the right direction. It's just a matter of let's see what the data is.
You mean the memorandum that was supposed to be signed in 2 weeks? That was 3.5 months ago.
It was one of the 14 ones that were discussed.
Yeah.
Yes, yes, it was one of those. Yes, yes. I hope we do get de-escalation. I hope we do get alleviation. I hope we do get a deal. Like, war sucks.
War sucks, and also trading during it sucks too.
I was referencing the trading, but yes, all aspects of war sucks.
Yeah, all of it.
But I'm sick of war headlines. Like, I'm sick of the pump and the dump and the insider trading and the nonsensical nonsense. Like, I'm sick of all of it. I want to get. For the last 3 months, Justin, I've been in either earnings mode or geopolitical mode, and I'm ready just for pure technicals. Like,
it would be nice to just have like normal trend days, except like we've had trend days, but the trend isn't normal. It goes up and then back to entry and then red and then finally trends, and there's no normal trending. I'd love to just get in around open and just hold and slowly trail my stop all day. Is that too much to ask?
100% agree.
I'm about to just slap a market long and ride this.
I'm taking 80% of my trade off. I'm fine. I'm fine with that, Justin. I'm fine. I'm fine.
All right, I'm in. Let's see if this is gonna work out.
It's been a good day so far. It's been a really good session, but it's been like, well, I'm 2 for 2 now today.
I think I'm 7 for 8 today, so it's been a great day.
7 for 8 today. That's killer.
Yeah, I mean, when the volatility in the morning, I mean, I can't hold, so I'm just taking whatever steps I see.
No, you're always going to take more trades in the morning, and you yourself are more aggressive than I am on the day trading. But 7 to 8,
normally,
killer, bro.
Normally, it's like 2 trades in the morning, but now you can't with this. If you're going to trade, you got to take it.
Well, if you're going to trade, you got to be willing to take it off very quickly because things change a lot.
And you got to be willing to lose because you're not going to win every trade in this market. I'll tell you that.
That's the truth.
All right, there we go. Pump it up. Market's just handing out money right now.
Dude, this gold thing's getting me excited. Not just on the intraday side. Like, finally gold is out beating the S&P. I've been waiting to say that for a month.
Oh, I missed my scale out. Okay, let's see if I get it.
I think I've said covered call environment on gold analysis at least as many times as Trump have said we've had a deal.
All right, if you got in with me, I'm setting a trim for 35 points on the Qs. See if we get it. Oh, no. Oh, that got close. Wow.
I'll tell you what. If we pull back to like 74.02, I'm just going to market order there and put a stop underneath that 9 EMA and see what we can get.
I like it. I like it.
Like it's going to be like a 5-point risk type thing. Like if that's an FA, like it's got to do it, but because I'm not chasing that big candle, but I will take the pullback here.
Well, that's what I was telling Becky yesterday, where she was saying she's like it's hard to buy the top. It's hard to buy the top. And I'm like, Becky, there's no top until you find a top.
There's no top.
There's literally no. All right, I just got trimmed out for 35. Nice trade, guys.
There legitimately is no top in the S&P.
When there's a trend, the trend will tell you when it's over, and you play every pullback until you start losing, and then you flip. And then that's how you do it. All right, I'm just gonna get out of this. That was like a $350 trade, guys, in a couple minutes. Damn, I'm up like $600 in this. I wasn't even expecting to trade today.
All of a sudden, Power Hour is going to become the Matt and Justin scalp show.
Seriously, I mean, I don't usually trade Power Hour, but
dude, Power Hour sucked yesterday.
I was listening to you complain. Trust me.
I could have complained about it the entire time. Like, you know me, Justin. I'm not going to come out and say, "Oh, that's a terrible trade."
Yeah.
But I was like, I don't love it. This is, that's. Like there was a lot of code why I did not like yesterday's trading session.
Yep.
And I had a very similar opinion throughout most of the day until we started breaking here, and it's just been a good trend since.
Oh, once I logged off at 11:30, I really had no interest in trading until after the pump. Now, when we get our secondary patterns and stuff like that.
Yeah,
but the chop earlier was brutal. Just up, down, up, down, up, down.
Man, this gold thing just keeps on moving, bro. Like,
oh my God, 240.
Yeah, it just keeps on moving.
We just broke huge hourly structure. So,
like, from the time I adjusted my stop, I was like, all right, I'm giving this thing no room. That's 30 points ago.
Wow.
Like, I'm not kidding. Like, it was
unreal.
I thought I was going to get stopped out. This gold trade's turning into a home run.
Literally. Wow.
Like, it's already up 50 points. Is he going to try to talk himself down? Jaja? If he does, let me know. If not, we're rocking here.
Trump is, oh my God, give us a freaking break, man.
No joke.
Oh my God.
An hour ago? What's he talking about, Jaja? Is it the Iranian thing or is it some other stuff?
It's got to be, unless it's just some schedule.
I would think. Like, what else is he going to talk about today?
I don't know. All I'm saying, guys, until there's a reason not to, just play the pullbacks. Like, there's not much else to say. Signing could be soon, maybe. He said that so many freaking times.
Maybe over the weekend. You know what? I love JD's comment on that the other day, actually.
What was it?
JD was asked a question when, and he's like, Iran really wants a deal. Really wants a deal. Could be days, and it could be months, anywhere in between. And I'm like, well, at least that's an honest response. Could be days to months. Okay, good. We know the time.
At least he's honest, right?
By the way, I did adjust my stop on gold again. I'm right underneath this candle right now. All right, this thing sniffs a pullback. I'm out
on the 5 minute.
Yeah,
I mean that's 15 points, so you got some breathing room.
Yeah. Oh, it's testing me. I'm gonna get stopped out. Like I'm telling it to stop me out. I'm like, market, stop me out. I want out. Stop me
okay,
out.
let's talk about that, because whenever I get that feeling, I'm like, I should just take it. You know,
but there's such a pump. I want to give it a chance. You know
I know, but when you start trailing, the ES by a point or two, like, just take it.
And that's kind of where I'm at right now. Is I love the trade. It's good.
That was killer trade.
I am officially out.
Love it. And I think that was great timing, because we're going to pull back. We're probably going to, you might get that other entry you want on the ES.
I'll do it on ES if I get this 7402 level.
Yeah, I would stay away from gold right now.
No, I'm done. I'm done with gold. Gold treated me great.
Mm-hmm.
I'm very happy about it. And we can talk later on tonight. Me and gold will sit down, we'll recap, we'll have a conversation, but we're good now. I've forgiven gold for the last 5 days of downward pressure in price. I've forgiven it for that. Now we're back to trading it, brother. Let's go.
Mm-hmm. And if you guys are just now joining, I've hit about 55 points on the Qs.
Wait,
Matt, what did you hit on that gold trade? Was it like 50 points?
I'd have to calculate. Hold on.
Something like that. And then the ES, I think you hit 30 or 40.
On gold.
So either way, we have printed her in this power.
I got 50 points right on the dot on gold.
Crazy.
Yeah. On the ES, I did scale, but total right around 42 points.
Yeah,
on the ES.
Killer. So what I'm trying to say is, guys, some power hours might be boring, but we're gonna hit bangers most of the time. So Hoster, you need to stop trading, Hoster. I've seen how much you've traded today. That man, all right, I gotta tell you, my man Hoster caught the whole Trump candle with 2 micros.
No,
the whole Trump candle.
You got the whole candle, bro. It's time to take a break. You don't need to trade. You got what you came here for.
Yep.
Jaja, JD's getting on a plane.
Oh God.
Really? You just want to dagger me a little bit? Really? That's funny, by the way. So Trump sending JD to Iran to sign the deal. Is that what he said?
Are you being actually serious?
I'm trying to figure out if he's being serious, because if he's being serious, I will not be in any content that day, because I won't be trading that day, because I'm not getting stopped out for the third time in a row based on a JD Vance headline. Nobody in America can handle that, Justin. Nobody can. Nobody can
make an announcement. Sorry, guys. Coach Matt will not be streaming because JD Vance is on the plane.
You think I'm joking? I'm not. Who in the world wants to be the only person to be stopped out 3 consecutive times by JD Vance on airplane headlines? I wouldn't be able to recover from that team.
Oh, he's actually will be there. Vance will be at the Iran deal signing.
All right, this isn't good for me. Send anybody else
over the weekend, so you'll be fine.
If it's over the weekend, we're good. We're good.
That's hilarious. Bulls held that pullback. I think we get another leg up.
Both of them are high inside development. Like, it's ridiculous bull control right now.
Yeah, it's I mean, we're saying it's ridiculous, but we traded it. We made good money off of it. So, like, that's also the thing about trading, guys. It doesn't make sense sometimes, but if you see it in front of you and the chart makes sense, like, just take it.
The catalyst changed things.
Yeah, like, there's no reason to just continue pumping into oblivion. We're breaking through daily levels. We're breaking through 4-hour levels. We're killing trend lines, like, but it's just pumping. So it's just gonna do what it's gonna do.
By the way, volatility is volatility, whether it's up or down, and this is still volatile. Like, it's very sensitive pricing today and yesterday.
And guys, if you are here, the plan for next week is to be back on schedule, full streamers all day, no downtime. Get some good content.
Mike in the morning, planning on being back next week?
Mike is planning on being in the morning next week. I think he's fully ready. And I'm going to try to line up some BluSky traders, some brokerage traders, just have a random talk, not structured at all. Just talk shop with them, because, you know, the market's pretty boring sometimes. And I love interviewing traders, learning about their journey. And I think other people do as well.
I do. I personally really love hearing trader stories about how they got there, how they overcame things, what helped them along the way. There's so much commonality in all of our stories.
Everybody thinks there's, like, it's so unique and they're only person having struggles. And then I also want to talk to people who haven't made it yet, because we can coach you in real time. Consider it like a one-on-one.
A little live one-on-one coaching session.
Live one-on-one. I mean, it's going to be mostly psychology stuff. We're not going to talk technicals, but
you should see my one-on-one coaching sessions. I can get extremely direct.
Oh, I can imagine.
Well, as a coach, when you're working one-on-one with somebody, like,
well, especially if you're working with them for weeks and months. Years.
Exactly.
That's where you go. Damn it, John! Why do you keep doing this?
And you're like, dude, come on. You got to get out of that trade right now. That is such an emotional, nonsensical thing. I think I literally said that last week.
Just like you. I agree. Yep.
That was not a short, you are a moron. Now, I'm not that harsh, Jaw. Read between the lines and you can assume that sometimes, but I am not that harsh. I don't like to make my students feel terrible about themselves.
One of my friends / students, and he's actually
a pullback, by the way.
Yep, and he's actually a brokerage BluSky trader now. I was like, what was the reason, like, you became profitable? He was like, dude, you just yelled at me one day and was like, why the hell did you take 47 trades yesterday? Why did you take 2 points on NQ? Why did you have a 15-point stop loss? Just stop doing that.
Wait a second. Taking 2-point targets with the 15-point stop loss?
Yeah, just like as soon as you saw green, taking the profit, letting the losers run, taking 50 trades a day. Like, just stop doing that.
They might have wrote the book Prospect Theory based on that dude. Wow.
But it's funny. I was like, do you have rules written down? No. We'll write them down and follow them, and I guarantee you'll make money.
Oh, and I can share my bad experiences. No stop loss, huge drawdowns. Yeah. I don't mind sharing my bad experiences. I don't mind sharing
No,
my
I
bad
mean,
trades. I don't mind sharing when I take a loss. Like every trader goes through it. And I made a lot of mistakes as an early trader that as a veteran trader, I wish I could go back to myself and kick myself in the face and be like,
oh yeah.
you need to do things differently. Right. So I think we could all learn from everybody's shared experiences. And I think we all have a lot of commonality in that.
You're transparent too. I'm transparent as well. Like I'll tell my horror stories. Like it's fine. And yeah, man, if you want to come,
have
on
a horror story, like I don't trust anybody's like, look at me, I win everything, I do this, I like, what are you talking about?
Yeah,
Everybody
I made it in 3 before. Like I made it in 3 months and now I'm profitable. It's like you either had the best coach and you actually just did what he said.
Yeah.
And that's still getting lucky because like finding the right coach that quick is not normal.
Well, the right coach and even you might get a couple trades right, but be consistent. Like that's the thing. Yeah. I was profitable in my very first trade I ever made. And it was probably the worst thing for me.
Same.
Because it taught me bad lessons with bad habits, that was over leveraging, that lacked any degree of consistency. And I blew up that first account because even though like in my first 3 trades, Justin, I more than doubled my first account. Yep. And when you're doubling your first account after 3 trades, you're over leveraging, period, end sentence. Yep. And I was, and then it went wrong. And when it went wrong, it went really wrong. And all of a sudden, like, I'm like, yeah, we gotta fix those mistakes. But like, sometimes I feel like initial success as a trader is actually worse than having a little bit of a drawdown initially as a trader.
Well, and I'm sure when that stuff started going wrong, you broke every rule in the book to try to make it right. And I know Breezy has the same story, similar story too.
Yeah, Jaja, that was mine. It was in the options market, and it wasn't a 10-cent thing. It was more of a, $5 to $15 thing because I was trading earnings. But even at that, I was doing so many different wrong things. Like the amount of mistakes that I was making are far. Like the list is this long. What I did right, I just decided to make a trade. That's what I did right. That was it. Making a decision that I wanted to trade was right.
Yeah.
Everything else was wrong.
Yeah, my first trade was a 475% trade with a ton of capital compared to what I should have been trading. Yeah. And that set me up for massive failure. Massive failure. I just started slowly losing that money just daily.
By the way, I took 3 lots on the 02, and I got a 3-point stop loss. I'm giving this no range. I just did what I said I was going to do. We'll just see if it works out. I don't love it, by the way, at all. I just had a good day. I might as well press it.
You got imbalance coming up in 30 seconds too.
Yeah. So either I'm losing $100 against what I made or nothing.
But yeah, trade for fun. If you want to come on the show, I would love to have you. I know him personally, or from the internet. One of these days we'll get Jaja or Vodka, and maybe we'll get both of them on here, and they can argue with each other. Get Ace up here too.
You and I can sit back and watch the carnage between Jaja and Vodka.
Exactly. Yeah. You paper handed that. No, I blocked in profits.
Paper hands, no diamond hands. Paper hands.
Yeah, right. Exactly.
Yeah.
Oh, that would be funny. Oh, cool. I'll shoot you a message. Yeah, we'll set it up maybe for next week. Awesome. Thanks, man.
How do you say that name?
I know him by a different name, so that's why I haven't said it.
Because if I can't pronounce your name, I'm just going to make up a name.
Casio Cavaloster? I have no idea.
That's way too hard for me to say right now.
Yeah.
It would be great to have you on, by the way.
You know what? Since we switched to YouTube, there's so many people. They're like, "Hey, this is me." I'm like, "Oh, dude, I was being way too nice to you. I had no idea who you are." It's actually a cheese. Okay, we're gonna call you Cheese then. No, I'm just kidding.
Oh, cheese is good.
Yeah, I like cheese.
Finally, little profit taking pullback here.
There's the imbalance. It was funny. One of my friends was actually in stream talking, and I was talking about him, my friend, and this other person was in stream, and I didn't realize it was him until he shot me a message. I'm like, "Oh, dude, I've been talking about you for like 10 minutes."
Woj, are you still there? Congratulations, darling. Well done. I just saw your Discord message.
What happened?
Woj's doing great. I think she might pass the email today.
Let's go.
Well done. I'm assuming you took that ES trade on the NQ. I didn't look that closely. Let me look real quick.
I may or may not be working on some certificates for passing milestones for you guys.
I absolutely love recognizing people that achieve certain milestones as a trader. I think it's fantastic.
Well-deserved. I was damn close to framing my first funded certificate.
I think it's a very impressive thing. I think it's should be recognized publicly and privately. I think we should all try to celebrate each other's success. When I see Justin make a great trade, even when I don't be involved, I'm like extremely happy for Justin.
Exactly.
I think communities need to support communities.
Yeah, like I was calling out levels this morning, and I didn't have the chance to put the order when it happened. But I'm like, did anybody follow that or take it? Because if you did, we won. That's all that matters.
Mm-hmm.
Learning a lot each day. So grateful for Coach Matt. Awesome. I love that. I love that. That is one of the best things you can hear as somebody who's teaching or streaming.
It makes you smile. It does.
I've had a few people tell me I changed their lives, and I'm like, dude, you're going to make me cry.
I've had those moments.
I had somebody I taught how to trade that was able to quit their job, and they're just trading now, and it's
well, and it has nothing to do with the money they're making. It has everything to do with the time they have to spend with their family, their loved ones, their community. Like too many times we get so much focused on money when it has absolutely nothing about money. It has everything to do with time.
You don't need to make that much money as a trader to have your life, like to not have a job. Just think about how much you make at your job and try to make that your goal. Not 1,000 a day, not 2,000, what everybody wants to make. 250, 300, and then you can do passion projects, side businesses. Yeah, I think I'm pretty much done for the session. I doubt I'm going to get anything.
I'm done for the session as well.
Yeah. Tomorrow will be a pretty light day here at BluSky. We'll do the morning session, and then we'll hopefully just make our money and call it a day. Go into the weekend strong. Did you guys catch the intro video earlier that we made? I thought it came out great.
Was it the one I saw yesterday?
Yep. Mm-hmm.
Yeah, that was a good one.
Yeah.
Said every trader for the last 15 years. Yeah. Text pumping, semis pumping, but you're right. Breadth is not, it's not a big breadth day, I would say. Breadth had been improving though, Vod, for like the last week. It had been improving. This is the first day we've actually seen relative outperformance on the mags and the high-end tech plays.
I mean, SPX pumped 120 points.
The size of the daily candles right now are quite outlandish.
Insane.
Like, they're quite outlandish.
Tesla almost 5% now. Oh, pretty clear downtrend on Tesla, actually. Do you swing Tesla or anything like that?
Not a lot recently, honestly. I mean, I've done a lot on Tesla over the years, but I'd say in the last 7-8 months, I think I've made 2 trades on Tesla.
I used to get wrecked by Tesla trying to trade the weeklies. The thing was like trading SPX.
Yeah.
So we're going to have a huge bullish engulfing on the daily now.
By the way, I've just convinced myself to make another trade on Tesla. I'm going to do a long strangle going into next earnings season.
Okay.
I'm going to buy a call, and I'm going to buy a put, and I'm going to wait for volatility build. By the way, that was one of my other trades on Tesla this year. I did a long strangle going into last earnings season.
Okay.
But on the directional side, like Tesla was in a very consistent downtrend earlier this year, and I didn't really do anything in that downtrend. It recovered throughout April and May. I think I made one trade on the bull side there, but the other trade was the neutral volatility trade on Tesla. But no, I haven't done much, which is kind of rare because I do like to trade Tesla oftentimes. Honestly, it just shockingly hasn't been a big part of the conversation recently. Hasn't really trended, and I maybe some of it is because Elon is obviously pivoting Tesla from a EV manufacturing company reliant on credits out of the government to AI platform, and they're even discontinuing some of their legacy models. They're going to be focusing on robotics. Oh yeah, they're going to be. They made the pivot last quarter to focus on Optimus production, robotics, automation, FSD. Really high end. Think about Tesla more on the high end tech play now these days than anything on the vehicle manufacturing side of it. By the way, I've always seen them as a tech company, but
they were just as a matter of time.
Yeah, but they are pivoting, and they're going very hard into robotics and automation. And I think it's a wonderful decision. If you're asking me what's more popular and what's going to make Elon and Tesla investors more money in the future, EV tax credits out of the government that doesn't support EV tax credits, or robotics and automation, it's going to be robotics and automation.
Yep, absolutely.
But when you pivot like that, it takes a little bit of time to get rocking again. Yeah, Jaja, they're close. They are close on FSD. The question: are you going to have Optimus in your house? Are you a day one Optimus guy? I am not.
Absolutely not. No,
I am not. You think I trust those robots with my kids? No,
I wouldn't trust them with anything.
No. Down the road, we'll see. But day one, no.
I think down the road, I think it's going to be everyone has one, and you're a weirdo if you don't.
I think it'll be everywhere. It'll be like having a car.
And then they're going to get so good that it's nobody's going to have friends anymore because they're chilling with their robot all day.
Yeah. That is a trend we are rocking to.
And then another industry I'm not even going to mention is going to be wild too.
Are you talking about the oldest profession in world history?
I am. Yes, I am.
Oh, that's a way to call it out and call it a day there, Justin, right there.
And on that note, it's been a great day here at BluSky. Matt hit absolute bangers during Power Hour. I took some great scalps this morning, was incredibly green. So let's do it all again tomorrow. Remember, light day, SpaceX, do not wreck your Friday. Breezy will be on at 8 p.m. tonight here on YouTube. Matt, any final thoughts before we get out of here?
No, had a wonderful time hanging out with the crew here today. Loved Power Hour, and Justin loved the conversation today as well. Team, you love BluSky, hit that like, hit that share, tell somebody about it, get an evaluation, come hang out with us in Power Hour in the morning session, and pass some evals, get to funded, and let's have some fun, team. Have a wonderful, wonderful rest of your day, and enjoy Breezy tonight. And Justin, we'll see you guys in the morning. Thanks, everybody. Stay profitable.